made and see how a little lad who was 27 years old at the time went on to make an extraordinary amount of money and then went on to set up two of the most successful trading floors within the next 6 years. Would you guys be up for that? Yes or no?
Exactly, P. Mundo.
First thing I learned was, please write this down. You guys got pens and paper? Lots of notes today. The first thing I learned is any training course you do, without belief built in is going to be a waste of your time. So my job here today in the next 90 minutes is to build some belief in you that you can make yourselves a fortune trading the currency markets. If I don't do that, I haven't done my job. Does that make sense to everybody? Yes or no? Okay. How many people here, by show of hands, think within the next 3 years you could become a millionaire trading the currency markets? Let me see by show of hands. Okay, so that's most of the room. And that's interesting. You believe you could be a millionaire trading the currency markets. Same question, or slightly different question now. How many of you are actually doing it today? Okay, very few, so maybe 1 or 2% of the room. And the difference between that I discovered was the following. People think that they believe they could be it, but the truth of the matter is they don't truly believe it. And I learned by working in the States a few years ago with a guy called Bob Dilt that actually there's a cycle that's set up and there's a belief cycle that is set up. And it starts like this. Whatever the original belief immediately impacts the amount of action you take. Please write this down. Impacts the leverage of your resources, which then impacts the results. And finally, and most importantly, this feeds back into the original belief. And here's the rub I learned, is that people think they believe in their ability to be successful in something, but that's just really the thought. It's not true belief. And true belief really comes from what's happening around you, what's real. And I realize that most people think they can be successful in say, this area in trading the currency markets, but unless the people around, unless they're in an environment where that's happening, the real belief is not there. And so what I've discovered, the quickest way to get people successful is two things. Number one, don't even try and teach people how to understand the financial markets. It's practically impossible in a short space of time. Show them what to do, show them when to do it. So please write that down. What to do, when to do it. Two things, quickly. And then the last thing they need to do is they have to see it real. They actually have to see somebody doing it live. They actually need to watch you, so the belief is built in their own experience. You know, what they say is your references, what's around you is what builds your belief. Many people in this room today have family members, friends, brothers, sisters who have all invested in the property markets. That's why we still buy and sell property. But very few of you in this room today will have friends who have made themselves millionaires in the currency market. So whilst you might think you could be successful in the currency markets, the question you've got to ask, are you actually doing it? And the answer to that question for most people is invariably no. And the reason it's no is because they're not in an environment where they're doing it. So there's not a lot of action taking place. The resources leveraged is really your time and your money. How much of it are you really putting into it? And then ultimately, what are the results like? Follow the cycle round. It starts here. Yeah, I think I could be successful doing this. The amount of action, well, I'll go along and maybe read a couple of books, try a couple of different things. The resources leverage, my time and my money. Yeah, I'll put a little bit into it. Results, awful. Feedback to the belief, yeah, probably not for me, probably doesn't work. Take an opposite person in a completely different environment. When I was a kid as an IT guy on a trading floor, 36 people, roughly my age, maybe a few years older, all of them trading successfully the currency market. My belief was it possible? Christ, I was watching guys and girls who were 5 years older than me making what I was making in a year every 5 days. Did that increase my belief of what was possible? Yes or no? Yes. Did it increase the amount of action I took? I took all my money out and threw it into a trading account. Did that increase that? Yes or no? The amount of action I took then impacted the time and the money I put into it. It was everything. The results were extraordinarily surprising. And of course, that fed the belief cycle and it went off in a different direction. So, the challenge is I have to get that across to you in 90 minutes. Can we do it? Yes or no? I think we've got to start by showing you a live trade. Are you up for that? Well, it's actually a Saturday, so the market is closed. But let's show you something I recorded not too long ago to show you what's possible. We will quickly jump to the laptop.
Just in for the little bit.
Because the game here is to build the
What we're doing, we are live streaming on YouTube.
Currencies are traded in pairs. What are they traded in? Pairs. So very much like you would imagine the stock market, when we buy one currency, we expect one to go up and the other one to fall. So what we're looking at here on the screens, if you look to the left and the right, this is the British pound against the US dollar. And we're looking to make £19,000 in 4 minutes. Would that be a good return on everyone's time? Yes or no? Would £190 in 4 minutes be any good? That's still not bad, but let's look at £19,000 in 4 minutes. I'm going to show you a trade. I'm going to jump, folks, straight into content now. Is everybody okay with that? I want to get right to the nitty-gritty because we've got a little bit of time. And so I'm going to assume the lowest level of knowledge in this space. So some of you may know some of the basic principles. I will get through those quickly, but I want to get you up to speed as quickly as possible because as far as I'm concerned, this is the most exciting, fastest money-making world, the currency markets, that everybody in this room should be involved in. And I want to get you into it quick. The first thing I'm going to show you is a pivot trade. Please write that down, a P-I-V-O-T-S, pivot trades. And it's one of the most powerful things you could do. It takes you between 30 minutes and an hour a day, and it could literally bring you in between £5,000 and £10,000 a week, relatively easy with low risk. Would that be a good idea, everybody? Yes or no? So let's start that game off. We're going to look at a pivot trade, and I'm going to play you a video right now. You're going to hear my voice come over the video, and then I'll explain what's happening.
Hey, I'm Talon, and this is Rumpus, and I'm going to show you how to start an online t-shirt business. Let's go. First, go to Shopify.com and start a free trial. Next, create your t-shirt. You can use your own designs or hire a freelance designer. Once you have a design you love, add it to a t-shirt and put it on your store. Now launch your store and start selling. Starting an online t-shirt business is easier than ever with print-on-demand services. Print-on-demand handles your inventory, packaging, and shipping for you. Here's how it works. A customer buys one of your custom t-shirts. The order is then automatically sent to your print-on-demand service for printing. It's then packaged and shipped directly to your customer. With print-on-demand, you can start a business for less money, less time, and less risk than traditional business models. And you never pay for a product until you've sold it. Oh. This means you can spend your time marketing your products, creating new designs, and talking to your customers because you don't have to worry about inventory or shipping. So what are you waiting for? Go to Shopify.com and start your t-shirt business today.
A pivot breakout now on British pound against the US dollar. Notice how the British pound against the US dollar has ranged throughout this, what we call R.5 to R1. And as British pound now breaks through here, as it's now doing, we're going to take a long position, which means we're going to buy British pound, and we're going to look to run up here. And that means running towards the R2. We're just really going to look to take 20 points. We're going to have a 20-point stop, and we're going to have a 20-point target. So a simple 20-pointer. Let's go place that trade.
Okay, does everybody understand what I'm doing there so far? Yes or no? No, good. So what I'm doing is what you just saw on the screen there was you saw a bunch of lines. Did everyone you see a bunch of lines across the screen which looked something like this? And then you saw some lines which looked something like that. And then there was this line in the middle, and there was this little lines going up and down like this. Did everyone see that, yes or no? Now, we noticed that the British pound was starting to break out through here. Well, first of all, what the hell is all these lines about? Well, traders, professional traders around the world use these lines as guidelines as to where currencies move to. This is a market of $4 trillion every single day. How many? $4 trillion. So these markets move around, they're extraordinarily transparent, and they give us very clear signals. If we're going to make money trading, we need very clear signals of which to trade upon. If a currency was to break through one of these lines, us as traders, we want to jump onto those positions, and we want to do it as quickly as possible. And what's happening here is you're seeing the currency break through the line, and that tells us there's an opportunity to buy it. Now, the challenge with this is that people who come to learn the currency markets have often traded the stock markets before. And in trading the currency markets, we know that something happens in the currency markets that doesn't happen in the stock market. What happens in the currency markets is because there are so many millions of traders that are looking at this thing happening, as soon as a currency starts to break out and starts to move upwards, what do you think happens? Exactly, it moves in the opposite direction. For some reason, the currency starts to move backwards. And the beginning, or the novice trader, do you think the novice trader is comfortable with that or freaks out? They freak out. And so in currency trading, please write this down, the most important skill is that of anticipation. Having an understanding of what's likely to happen. Anticipation in currency trading is king. And so when people don't know what they expect to happen, of course, when it does start to move back, they freak out. Now, why does that happen? Well, the reason it happens is in the currency markets, when currencies start to move upwards and they break through these lines, the big traders want to test how strong the move is. So immediately what they do is they sell the move. So they'll sell it up here, and the currency will start to fall. If you know what is likely to happen, you have the anticipation. Of course, that's the mother of all skill here. You know not to freak out, and you know what to do next. Does that make sense, people? Yes or no? If you don't know, likelihood is you'll freak out and do something in reaction. When you act in trading out of reaction, your emotions are involved, and you're always going to do the wrong thing. So we have an anticipation, this pullback, what we call a pullback, is going to happen. Let's walk you through that as the market now moves. So let's go back to the video and take a look at that. So we can see here, if we just jump back to the screens, the British pound here is just breaking through, and I'm anticipating it to move up a bit and then do what? Pull back. Is everybody clear? Okay.
Okay, so it looks like we have cable at about 61.68. We're going to go 1,000 a point.
Okay, so let me just quickly interrupt the video again. It's a long walk on this stage, folks. 61.68 is where I'm buying the British pound, and I'm expecting it to run 20 points. How many points? 20. So I want it to run to 61.88. That's what I'm looking to make. And I'm trading at £1,000 a point. And that means every point it moves, I look to make or lose £1,000. And interestingly, doing it in the United Kingdom, it's completely tax-free. So everything I make or lose, I pay no tax on, which is quite important. Okay, so that's what I'm in. I'm in at 61.68, and I'm looking to get out at 88.
We have a 20-point stop. So that's 20,000. And yeah, we'll happily buy that. Good. And we can see here, that's good. So 1,000 a point.
And there I am.
Our average price, our current price here is 161.89 because we're up 1,000, and the trade is moving. Now we're happy to take that 20-point stop. That's about 20,000 risk on a 2 million account. That's 1%. So we're happy with that. We are in the trade. We'll now wait for the position to see if we have some movement, and if we have movement, you'll see it move quite rapidly. So we have a couple of points. We have 3,000, 4,000, 5,000. Expected to pull a little bit back off that level, bounce, and then continue moving. Notice here as I extend out the line here, we've got the trade registered here. Current price 61.70. P&L is 2,000, now 3,000. So this is going to move around. It's the deal price on the trade, as we can certainly see here, was 61.68, and the trade is steadily moving along. And all we're looking really now to do is pull 20 points. Now the way we'll do this trade is on this platform I'll hit close deal in a second, which will then bring up the trade ticket. It's a lumpy trade, 1,000 British pounds a point. So that means that we need to make sure that the brokers are aware that I'm trying to exit the trade. So I'll hit close deal, and it will allow me to bring up the deal ticket. And then I'll literally just hit close, or I'll hit obviously buy to close. Sell to close my lot.
Eek! What's happening? The market's selling it, and at this point, people get freaked out. So I'm now down minus £1,000. What would your novice do at this point? They'd sell. They'd freak out. But anticipation is the mother of skill, and I'm expecting this to happen. So I casually wait and carry on. In fact, interestingly, I've learned something about myself. I video myself trading all the time, and I put that out on the internet. And I've learned that all of us have tells. Do you guys know what a tell is? You can tell, like, physiologically there's something going on in the person because they do something. And I know my nervousness is always and I've followed by a little video, so you can look out for it, even though we're down a bit.
Wherever your office is today, the new Jabra Evolve 2 professional headphones make the world your office. With unrivaled call quality and outstanding noise cancellation, Jabra Evolve 2, engineered for flexible working.
Testing that level, what I was expected to do would be bounce and immediately now start to move back upwards, and that would be my expectation. So again, I'm up a point, 1,000, so not a lot right now, but I expect this bounce, and it's now starting to bounce upwards, so back to 3,000-4,000, and really now just waiting to close the deal. When we get over the 20-point mark, where I should be able to see about £20,000 of profit, I'm literally going to start to hit the close deal button and pull this trade off the table. I'd expect the run around now, given that it's broken now, clearly gone through that level. Here we can see it's 12,013. Here we are. We're up to the 21,000 mark. So I now want to exit this trade. So I'll be now moving my mouse. See if it can hold this level. Let's close the deal here now, and see if we can lock that 20 points. So it's holding 22,000. It's not going to move anymore. Let's click the close deal, and let's get this trade priced up. I'm waiting for the broker now to pull my price. So you can see the price has moved around, and here I go, and it's going to hit sell at 20 points is what I'm after, which is around this level here, and we'll take the trade just about here. Let's tick it up to 20. See if we can capture 20. There it is. Okay. Oh, we got 19. Okay, that's close enough. So there we are. That's how you make £19,000 in about 3 or 4 minutes. So there we go. Let's move on and have a look at and see if we can do another one.
Okay, cool. Good trade. Thank you. Okay. It is the asset class of the super rich. It trades something like, please write this down, about $4 trillion a day. So it's very big. What does that really mean to you? Well, the problem with the market, if you're going to, let's say you were to take an hour a day out of your time and devote it to creating an additional income stream. And let's say that additional income stream within a period of 6 to 12 months could contribute another £5,000 to £10,000 a week profit to your bank balance. Would that be a good use of time? Yes or no? Yes or no, folks? Now, let's look at the cost of doing that. Well, first of all, you've got to risk measure it up. There are lots of different things you could do. A market that's risky, in my opinion, is the stock market more than the currency markets. And the reason for that is that the stock market closes every night. And when the stock market closes every night, the next day it opens up, it can gap down. The currency market is open 24 hours a day, 5 days a week. It therefore means that because there are so many people trading it and there's so much activity in that market, the signals are better. And the reason the signals are better is because there's more people doing it. It's a more liquid market. Please write this down. The greater the liquidity, the greater the precision, and the greater the predictability. This is how you can get people who have never traded the markets before or have traded the markets badly in the past and give them one or two simple systems and have them generating a couple of 100 points. We'll talk about what they are in a second, or pips or points a week, and getting out of their job within 3 to 6 months. Now, you can't do that in other markets, but you can in this. And the reason you can in this is because there's high predictability, and that's critical and important. In my experience, the money that you can grow in this game is phenomenal. You can control £100,000 with £1,000, and because this is so much bigger than any other market, the New York Stock Exchange is a swimming pool, while the currency markets is the equivalent of 7 Atlantic Oceans. So there's high precision here. It's a 24-hour-a-day market. You can trade it whenever you like. Today, with an internet connection, a tax-free broker in the UK, and some simple software, learning 1 or 2 systems, you can start making money not within months, within minutes, and be up and running. In fact, what we do is I take people, we train them up for 2 days. The expectation is not to understand the markets. I always say to people, I do not teach people to trade. It's impossible. But I can show them how to make money from trading. Let me ask you this. Would you rather understand soup to nuts the currency markets and the financial markets, or would you prefer to know what to do and when to do it to produce an income? Which one? The first or the latter? The latter. Now that means that the almanac of trading is really not what I do, but I'm going to give you a bit of an insight as to how it works. Currencies are traded in pairs. That means when one goes up, generally the other one goes down. That means if you think the British pound against the US dollar is going up, you buy pounds and dollars are being sold. Conversely, if you think the British pound is going to go down against the US dollar, people are selling pounds and they're buying dollars with the money. And that's really all that's happening. There's two other things that really push the markets. There's the buying and selling of the currencies. There's also how the traders feel about the marketplace. And that's the old fear and greed that's attached to it. I'm going to play you a video now of this depicted in the stock market. The same thing applies. Check this out.
There are all kinds of technical explanations for stock market crashes. But at root, it's all about herd psychology. In a bull market, that's when share prices are rising, even the smartest investors can succumb to what the former chairman of the American Federal Reserve, Alan Greenspan, famously called irrational exuberance. But when the herd changes direction, sometimes in reaction to nothing more than a change in the wind, their mood can also change from euphoria to gloom. The herd stampedes.
One cow gets scared, and that fear just translates to the whole herd, and they all take off. And the rest of them don't know why they're scared. They just feel that fear, and they run. Fear overwhelms all rational thinking until it's over.
In market jargon, the buyers have turned into sellers, the bulls into bears.
Despite the zoological imagery, the point is that markets are mirrors of the human psyche. Like Homo sapiens, they're prone to mood swings, from greed to fear. They can suffer from depression, and sometimes they can experience complete breakdowns. That happens rather more often than some financial theories would lead you to expect, but not so often that we're ever quite ready for the next breakdown.
Okay, the great message in this is that, please write this down, fear overrides all rational thinking. Now, this is critical and essential. Fear overrides all rational thinking. So, how do we use it? Well, write this down. We don't do as we think. The results you have in your life are based on how you feel. How you feel about something defines whether you do it and therefore get the results from it. Most of us think a good game and we play a poor one. In the trading world, it's all driven by how people feel. In the currency markets, if the market feels a certain way, there's going to be an action that happens from that, and there can be a lot of money which can be made. Now, in the currency markets, fear is your best friend. Let me illustrate something. If I can just jump back to the slides very quickly. A bar chart on the currency markets looks like this. This is how we read the currency markets on a daily basis. And you'll notice there are 4 elements to that chart. If I draw them on the pad here, you can see there's an opening price, there's a low of the day, a high of the day, and a close of the day. That's what we see every single day when we look at the markets. However, there's something which happens regularly in the European session here, which is where most good traders can make all of their money long before any of you even go to work. Let me show you how it works. If you imagine yourself looking at a chart, and the bars on the chart are 1 hour in length. So this would be 5 a.m., this could be 6 a.m., and this could be 7 a.m. And let's say this was the euro against the US dollar. Something happens 2 or 3 times a week on European currencies against the US dollar, the euro or the British pound against the US dollar. And those of us who are in the know, that know what to anticipate, can make a decent chunk of change from it. Let me show you how it works. We notice here, first of all, that the British pound, or the euro against the US dollar is moving up. Does everybody agree, yes or no? And this is 5 o'clock in the morning, and most of you are asleep at that time. At 6 o'clock in the morning, again, it's the next bar says, well, the euro's going up, everything's normal. But something happens on the 7 o'clock bar here on the euro at 7 a.m. The market opens, moves upwards, and something happens in Europe early in the morning. And for whatever reason, it shoots up, but then it shoots right back down. And it's this that causes the concern. And this is exactly what we're looking for as high professional traders. We're looking for what we call a high test. What are we looking for, folks? High test. That's right. The market has risen up, it's hit high, and then it's fallen right back down. Now, this fear in the marketplace equals a money-making opportunity. And it happens 3 or 4 times a week. And what we do as professional traders is we look to draw a line underneath that, and then we sell the market, hoping this is going to happen. And it happens most of the time. This high test on European currencies happens with regularity. And if we're set up for it, and we know exactly what to do, we can take between 50 and 60 points a week. Sorry, a session every time it happens. So this is 50 to 60 points times 3 days a week. This can give us between 150 and 180 points per week. Now let me monetize that for you. If you're an average beginner, novice type trader trading at £10 a point, you're looking at making £1,500 to £1,800 completely tax-free for about 30 minutes of your time. This is purely a case of knowing what to do and when to do it. The rest of the market, the uninitiated, the people that haven't followed where the professional money is, it's the professional money which is initiating this move. Most novice traders are trying to fight with the professional money and come up with their own ideas. My point is, understand what they do, copy what they do, and then run the same positions that they're doing. All they're doing is they're capitalizing on a profit run they've had in the morning, and then they're turning the market over. That fear freaks out most novice traders. However, if you know that it's happening, you know it's about to set up, and you understand the signal, can practically everybody in this room take advantage of that move, yes or no? And if everybody in this room was to do that same trade every single day for the next 3 years, let's say we built a room this big and we kept doubling the size of the room up, would it affect the currency markets at all? Would that start to not work? And the answer to that question is no, it would keep going. And the reason is because it's such a gigantic marketplace. You try doing that in the stock market, things start to slow down and stop working. That strategy's worked consistently for the last 14 years. Every single day, there's that opportunity that can happen 3 or 4 times a day. To make 150 points, in some cases, when people start out, that's only £1,500 a week. That can quite quickly become £15,000 a week. Is that worth doing for maybe an hour and a half a week? Yes or no? Now, how does it work? Well, take a look at the following slide. If this is the British pound against the US dollar, unlike stocks, we quote to 4 decimal places, and the pips are the 3rd and the 4th decimal place. And so if we were going to buy the British pound at 155.70, and it ran 20 points, and we made 155.90, how many points have we made? We've made 20 points. And if we were trading at, say, £20 a point, we've made how much? We've made 400, exactly right. And that's what we're looking to do consistently. Now, with all of trading, whether it's the currency markets or the stock markets, here's what losers say. Let's identify what your loser trader says. He says, he looks at the screen and he says, how much money can I make? And that's always the wrong thing to say. The winner says, how much money can I afford to lose? That's right. So let's teach you some of the secrets behind this. First of all, what do millionaire traders do? All of them, bar none, keep the risk as low as possible. And the maximum risk we look to take is 1%. What percentage? 1% per trade. So if we have £10,000 in a trading account, the maximum we're prepared to risk is £100 and no more. Let's look at an example of how this works. You'll notice there's a chart up here, and it's the British pound against the US dollar. Notice a few things. As the British pound is ranging, let's draw it up here. As the British pound is ranging here, it hits up against the line that we call resistance. What do we call it? That's right, against resistance. Then it falls, and then finally it jumps through the line, and then it comes back. And that's exactly what that graph was just showing you a minute ago. And as traders, as foreign exchange traders, we are waiting, please write this down, we are waiting for the pullback. That's where the money is, every single time. We don't buy here. We never buy here. We don't do that. That's what your stock traders do. They're buying things which go up and break up through these lines of resistance. We don't do that. We wait for the market to go through, and then carefully, steadily, and considerately, we wait for the market to pull back. In other words, we're waiting for those professional traders to sell the market, and we're waiting for it to come back down here. And as it does, And as it starts to pull back and then bounce, this is where we buy it. And it's an adage of all professional currency traders. We're waiting for the pullback. If the pullback doesn't happen and it runs off to the moon, we leave it. But if it does happen and it pulls back, this is our opportunity to make money. Does that make sense, everybody, so far? Now, the question becomes, how do we keep the risk low? Well, let's jump to the slides very quickly and we'll illustrate it there. Okay, so this is where we would buy. We're looking to buy the market. Notice it jumps through the line of resistance. That line of resistance now becomes a line of support. We would expect that line on the chart to support the price. And invariably it does practically every time. So when the currency comes back and starts to bounce on that line, we would expect to buy around that point, really where the green line is here. Now, of course, we need to know, well, where do we protect ourselves? Where does the stop loss go? Well, the stop loss is our order in the marketplace to kill the trade if things go wrong. Is it conceivable that I could buy that and it could still tank, yes or no? Of course, and at some point I've got to cut the trade out to protect myself. The distance between both of those 2 points is called the risk. And the first job, write this down, step 1, I must measure the risk. So I've got to measure the risk. In this case, the risk is 50 points. Please write that down, 50 points. So this is a working example of how to measure and set up the risk nice and low on every single trade to make sure I get it right. Now, why do we do this? Because we know where gamblers make the biggest mistake in the casino world is they'll go into the blackjack table, they'll start betting, and they keep the risk the same on every single hand. If I start with $100 and I bet $10 on every hand, if I start to lose, has my risk increased if I keep my hand at $10? Yes or no? Of course, because I have a smaller pot. And they don't risk size down. In fact, what gamblers tend to do is they double up on hands, don't they, to try and win their money back, and very quickly they get cleaned off the table. In fact, if you were to film a casino and you were to turn down the volume and then play the video back on double speed, you just watch a bunch of people going into a room, emptying their pockets and walking out again. And that would be a great business to have. In the currency markets, it's exactly the same. If we don't keep the risk low, we're effectively gambling. So we measure how much risk is on the table, and we know it's 50 points. Then what do? Well, we realize that we can't risk more than 1% of our account on any one trade. So if we had a £10,000 account, we can only risk 1%. Okay, so what? Well, now I know I've got £10,000 in my account. I've got 1% risk on the table, so I've got 10,000. I'm going to risk only 1% times by 1%. I know I cannot afford to lose more than £100. That's my maximum risk. So how do I use the information? Well, I'm trying to figure out, let me tell you the question I'm trying to figure out. The question is, how much money should I place on this trade? And the answer to that question is, well, it's my £100 divided by the 50 points of risk that was on the trade. The maximum amount I can afford to place on this trade is only £2 per point. That is it. And by doing that every time, I make sure that if things go wrong, which invariably they can do from time to time, then I don't risk more than 1%. If I'm smart enough to do that, it means two very important things. Number one, if I lose a bit, I lose less and less and less every time. But as I win more and more and more. Does that make sense to everybody? And that's one of the most important messages in trading. If I lose a bit, I lose less and less and less. If I have £10,000 and I move to 9,000, well, now I'm only going to risk £90 per trade. If I have 20,000, now I'm risking a bit more. I'm risking £200 per trade. Does that make sense to everyone? So by doing that, I keep my risk in check, but I allow my account to grow whilst keeping the risk in check at the same time. Okay, good. There's a should list and a must list operating in all of our minds. And the biggest killer to success, this is the National Achievers Congress. And I do this congress with this organization all over the world. And whether you're in Singapore, Australia, New Zealand, London, or America, it's consistent across society. Comfort is the biggest killer to success. Please write that down. Comfort is the biggest killer to success. Most people, sadly, are comfortable. And so they operate out of a should and a must list. The should list says I should become wealthy, I should travel the world in style, I should buy my dream home and my holiday home as well, and I should be the person I've always wanted to be. That's the should list. The must list says I should pay my bills, go to work, eat and sleep. Which one gets done, left or right? Invariably it's the right. Why does the must list get done, but the should list doesn't get done? And here's the answer. The must list, if not done immediately, it's always followed by pain. There are two driving forces, as Tony was just saying, behind all human thinking, which is the desire to avoid pain and the need to go get pleasure. And the ones on the right, the must list is, hey, if you don't hit those, if you don't eat, if you don't sleep, if you don't go to work or don't pay your bills, you're going to be in pain immediately. If you don't travel the world in style tomorrow, enter the airplane, turn left, or buy your dream home, are you going to be in pain tomorrow? Of course you're not. The only time you really get in pain with the left-hand side is when you meet somebody or see someone you haven't seen for a while that's living in that world. And that reminds you of the things that you promised yourself that you haven't followed through on. Does that make sense? In fact, when I started doing this tour with this organization a few years ago, I met a guy that you're going to have the opportunity to meet at this conference over the next couple of days, and a guy called T. Harv Eker. Anybody met T. Harv before? Quick show. Yeah, you're going to love that guy, yeah. Absolutely amazing. I absolutely love him. And we started touring in Malaysia, and we met each other, and we just got, you know, some people you get on with like a house on fire. And we're flying. We decided to get our seats together in the airplane so we can fly through Singapore and back to and down to Australia doing this tour. And we were just chucking ideas around, and I said, you know, it's fantastic. I said, people, you know, they want to get rich, and they talk a good game, but they don't do it. I said, I don't understand it. I said, you know, there's some simple things that need to be done. I said, I was a kid on a trading floor as an IT technician earning £15,000 a year when I first started. I said, I can make that in like 5 minutes now. And he said, yeah, I know. He goes, Greg, the simple truth of the matter is, he goes, people aren't stupid. He goes, it's just that it's not that people are aiming for here in life and missing it. That's not what's going on. He said, people are aiming for here and hitting it. I was like, you're absolutely. And so suddenly a seminar kicks off at like 35,000 feet on a Singaporean airline flight above Malaysia. And there's T. Harv going backwards and forwards with me, and we're talking about it. And I realized very quickly is that people, when you ask them what they want, most people don't know. And by not knowing what they want, they invariably get the stuff they don't want, and that's what's happening all the time. When I do these conferences around the world, I meet thousands of people, and people say to me, oh, I want to be a successful trader, I want to get started, teach me what you learn, teach me what you know, show me how to make money, and I'm going, great, stop. What do you want? And most people, when you ask them that question, what they want, they simply don't know what they want. And so therefore, they haven't put their mind in the space of what they want. Simple rule of success, you'll learn this from Richard Branson, you'll learn this from Tony Robbins, you'll learn this from Robert Kiyosaki, you'll learn from everyone here, is people who are successful know what they want, and they've got an understanding of how to get there, the steps in between. The rest of the world has no idea what they want, and they aren't focused on a daily basis. All they're focused on is dealing with problems. They're dealing with you say to them, what do they want? And they'll say to you, I don't want to work for this guy no more. Or I don't want to do this no more. I don't want to be married to him or her no more. But they're focusing on all the things they don't want as opposed to the one or two things that they do. And we found it's impossible to get anybody successful, whether it be trading or investing in anything, unless you can focus them on a goal. So the solution is this. It's goal first, set the meaningful goal, and then break it down into the core components of what needs to be done. And in my experience, certainly my opinion, that works like a charm. If I can't elicit from you what you want, teaching you to trade then becomes kind of pointless. Does everybody understand what I mean by that? Yes or no? So I'd like to walk you through a process that, if I can just jump back to the slides really quickly, what I believe is, in my life, I've made more money in the last 20 years than I could have possibly imagined. Wealth is doing what you want, with whom you want, wherever you want, whenever you want, as much as you want, and as soon as physically possible. Do you guys agree with that? Yes or no? So we have a process called the 4 steps to change, and I want to walk you through it. You guys up for this? This is really very cool. This used to be called the 9 steps of change, and I just realized people couldn't cope with 9 steps, so we had to kind of shrink it down to 4. And we're going to give you an example of how I used this in my life not so long ago, how it yielded some nice results. Has nothing to do with money, actually. It has to do with a completely different area of my life. And I want to share it with you by giving you an example of how I use this to train people to get wealthy first and then use the tools to then go and make a lot of money. If you want to become rich, you've got to sort this out and then a couple of simple tactics or skills. Does that make sense? The two go hand in hand. If you teach somebody how to make money trading, forget it, they'll never do it. They'll give up 2 days later. If you say to them, what do you want? And they say, I want £10,000 a week. And you go, great, why do you want that? And they say, well, because I want to do this, 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 and this, and I want to pay off that and do this and do that. And you went, great, now let's build the goal around that. Let's break down what needs to be done. How many trades do you need to do? How much money do you need to put in the account? How much time do you need to devote to it? When are those money-making opportunities in the marketplace? Suddenly, like a laser beam, that individual's brain becomes focused on exactly what needs to be done and exactly how to do it. Does that make sense, people? Yes or no? They stop talking about the bullshit. They stop worrying about their wife or their husband or their job or the things they've had enough of in their life, and they start to laser focus. So there's a process, and it's called the 4 steps of change, and I'm going to teach it to you now. You guys up for it, yes or no? There you are. Okay, step number 1. Please write this down. Create a meaningful goal. So I'll tell you a story. The story goes like this. I'm on my trading floor, not too far from here if you jump on the river, down to Chelsea Harbour. Our trading floor is on literally at Chelsea Harbour, and I have all my traders on there, and we have a training centre where we teach people how to do this, and then they go and sit with a trader, and they trade live. And I'm sitting there with a trading team about 3 years ago, and we're looking out across Chelsea Harbour, and opposite my trading floor is Battersea Heliport. Do you guys know where Battersea is? You should know. Battersea Heliport, the little heliport that juts out on the jetty is there, and there's helicopters landing, and one of my traders says to me, Greg, why haven't you got a friggin' helicopter, dude? What's the matter with you? And I said to him, yeah, you're right, I should learn to do that. And at the time, I was playing a lot of polo. I broke my back playing polo last year, so I stopped that as a bad idea. But prior to that, I was playing a lot of polo. I thought, maybe I should get a helicopter. I could fly straight from Battersea out to the fields and be there in like 5 minutes. That's probably a good idea. And so I decided that was a good idea, and I phoned up a friend of mine, and I said, who should I learn from? And he said, there's only one guy you need to phone who's the best at teaching you to do this in the country, and his name's Q. And he's like an old, he looks like an explorer. He's got like a proper moustache. He looks like a brigadier in the old army or something, and he kind of talks like this. And so I picked up the phone, and I called this guy Q, and I said, Q, I'd like you to teach me to fly. And he said, look, I'd love to be able to teach you to fly. He went, hello, Greg. He speaks like that, right? I said, hi, Q. I said, I would love you to teach me to fly. You've come highly recommended off one of my friends. I'd like to get started straight away. I said, I'd like to know what I have to do. He goes, well, Greg, first of all, I'm very busy. Can't teach you for another 6 months. I was like, oh, okay. Well, can you tell me exactly what I need to know in order to become a pilot? And he said, sure. So jump to step 2. Step 2 is plan it with surgical precision. So I'm on the phone, write this down. Step 2 is plan it with surgical precision. What exactly needs to be done in order to get me as a successful pilot? At that point in time, I had absolutely no idea. He's telling me how many hours I've got to give it, what exams I've got to do, what medicals, all the training that's required. And suddenly I realized, okay, I want this is what I've got to do. And I have a very clear picture now of the activities of what need to be done. So we're talking away, and I get really excited. I've written loads of notes like you guys are doing. An hour later, I'm like, great, now I'm excited. I've realized this guy's a complete nut. I want him to train me because he's eccentric, he's mad, he flew a helicopter through the South Pole, he's an absolute lunatic. So I realized if anyone's going to teach me, I need this lunatic to teach me. So I'm excited. I said, would you train me? He says, no. Then I figure out, okay, I've got to make this thing happen. So step 3, write this down, schedule it and lock the door behind you. So I said, well, hold on, I've got to think quick now. I want this guy to train me. But he's not really biting. He's busy. He's got 6 months, of training to do with London Air Ambulance or whatever. So I suddenly want this guy and I can't get him. So I suddenly thought quick, and I thought, well, I remember an old phrase which was 90% of your problems can be solved by writing a check. Have you heard that phrase? That's an important phrase. 90% mine, not 100, but about 90% of your problems can be solved by writing a check. Let me test that one out. So I said to him, how much is it going to cost me to do this? He said, well, we just invoice you every month, how much you fly. I go, well, yeah, I know, I understand that. I said, but to, maybe put a deposit down on a helicopter finally and to do all the trading and everything else. What's going to set me back? He says, well, I don't know. He goes, are you coordinated? I said, no, not really. He said, well, about £70,000 or someone like you. I went, £70,000? Are you kidding? He goes, well, I don't know, something like that. So I went, okay, fine. So I said, I'm going to be in Barclays this afternoon. I'm going to wire you the money. It will be in your bank by 5 o'clock this afternoon. He says, Greg, you do that, you start next week. And that's how it happened. So what it means, step 3 is schedule it and lock the door behind you. It means, what do you have to do to ensure that you follow through? Does that make sense? It's not just a case of, most people set the game up so that it's difficult to follow through, easy to back out. Does that make sense? That's why most people never get the stuff they want, because it's difficult to go forward, easy to back out. You've got to set the game up the other way around, where it's easy to go forward, now it's difficult to go back out. Okay, step 4. Step 4 is what? Get around the path walkers, get around the people. So not only did I start to learn to fly and do this activity with folk, but I also learned very quickly that the quickest way for me to get successful was to get to the airfield maybe a couple of hours earlier than when my lessons were booked, and spend time with professional pilots who do the same thing. And that's exactly the same process I take with young traders who are looking and wanting to make a decent income from trading. Today, the markets are all about learning what needs to be done and when to do it. A trading strategy, write this down, a trading strategy equals zero discretion. Zero discretion. So in other words, you sitting there going, I wonder what I should do. Should I buy the euro? Should I sell it? Should I wait for the news? Should I front run the news? No. A trading strategy is a tried and tested system that someone else has done all the work on. And all you have to do is implement it at the right time. Does that make sense? Now that requires a little bit of discipline to do what you're supposed to do rather than do what you think. So as your confidence grows, what can happen is you can become overly confident and then start doing the wrong thing. And that's the only bit where you've got to rein yourself in. In my experience and opinion, when you then do that, the results flow. I want to get focused on you guys now and see what you could do. Would you guys be up for that? Yes or no? It's all right, me flying around in a helicopter. Let's get you guys up there and making you some money. It all starts with getting you focused. So I've talked a bit so far about what mechanically you need to do when you're trading. Does that make sense? The problem is, if you never do it, the information is kind of irrelevant. So in order to get you to do it, we have to get you focused on doing what needs to be done and focused on what you want. Is everybody cool with that, yes or no? So I'd like you to write down 3 things that you want that you haven't yet given yourself. Do that now, please. 3 things you want. Monetarily, if you were to have, and some of you would be uncomfortable with the numbers, and I'm okay with that. If you were to have an extra £40,000 a month coming into your bank account, what 3 things would you give yourself that you currently have denied yourself? Listen to the words I'm using, that you have currently denied yourself. Because if your thinking can't allow for an extra £40,000 a month to come into you, is it likely it's going to happen? Yes or no? Yes or no? So you've got to expand your thinking past £40,000 a month to start with and accept that. And accept that and say, well, actually, that's okay. I'm probably allowed to have that. Would that be a good thing to do? Yes or no? And write down 3 things you would give yourself if that were to happen. The 4th on the list was get around the pathwalkers, get around the people that are doing it. Good note taker. So what 3 things would you give yourself? Write them down very quickly. And what I've noticed is that there are, interestingly, I'm going to bring this up here. Crikey, this is heavy. Right. Now, we are mostly focused on fear when it comes to money. The world is screwed in that way. There is such an unhealthy emotional connection to money in this country. Most people are totally screwed, and they don't realize it. And I want to identify it, and I want to raise it with you. You guys up for that, yes or no? When I was on that flight with Harv Eker, 35,000 feet above Singapore, we had this conversation, and Harv said to me, you know, when I'm on TV, one of the things I say is give me 5 minutes with anyone, and I'll tell you how rich they're going to be for the rest of their life. And I said, that's pretty cool. How do you do that? He goes, well, I'll show you. He goes, it really is asking people a few questions. So we're going to have a little audience participation. I apologize to the people right at the back of the room because it's going to be difficult. But the ones that are up here, are you guys okay to play? And the ones at the back, if you just shout really loud, I'm sure I'll hear. But I want to uncover 2 things. First of all, if I said to you, I want to compare this. If I said to you, money, what does having lots of money mean to you? Okay, so we've got freedom. This is having money. Freedom, yeah, what else? Toys, okay. Security, what else? Sorry? Time, I have time, yes. I did this in Australia, and the guys went, women. And one of the women stood up and went, men. That's Australia, though. Okay, so yeah, men and women, yeah, what else? Charity, wow, yeah, good. Fun, relaxation, toys, walking up, partying, I think somebody said. Okay, now would you all agree that when I said to you, what do you think about when I say having lots of money, or what do you think about when I say having money? Everything that you guys came up with, pretty much, or certainly that I could hear, could be categorized as positive. Yes or no? It is, isn't it? And I said to Harvey, he goes, yeah. I said, well, what's the problem? Most people are, pretty positive associations with money. And he goes, He goes, no, that's what people think they think about money. That ain't how they feel. And I was like, yeah, right, I teach people that. I said, well, people don't do as they think, they do as they feel. He goes, correct. People do as they feel. He said, so you're asking the wrong question. The question you need to ask to uncover how they really feel about money is the following. What do you remember being said to you around the subject of money when you were a child growing up? Money doesn't grow on trees. Look after the pennies, and the pounds will look after. Do you remember that one? Anyone have a parent who said, we can't afford it? Yes or no? Show of hands. Most of the room. Do you know, when you tell a child, we can't afford it, does a child hear, well, at this particular point in time, we must exercise a certain amount of fiscal restraint? No. A child hears, hey, there's a category of people in life who can afford stuff. You ain't in it. And it shuts them down from the get-go. Do you guys believe that's true? I believe that's exactly what the problem is. It's unhealthy. It's like a disease. So money doesn't grow on trees. We can't afford it. What else? Rich people are root of all evil. My writing's good, huh? Rich people are mean. What else? You have to work hard. And so on and so on. This is all pretty positive or negative. It's how everyone feels about money. People have got massive approach avoidance. People don't think they're worth it. People don't think it can come easy. People think if they got it, other people would take advantage of them. It would be a nightmare to manage, and you'd get screwed by the HMRC because your tax planning strategy wouldn't be perfect. In other words, there's such negative a connotation and connection to having a lot of money and money as a principle that most people emotionally are pulled back from having it. The only way through this is, first of all, to identify it. Please write this down. To get over your money hurdle, Harv said to me, the last thing he said to me before we landed, he said, money's like an emotional thermostat. He says, people, they get to a certain amount of money per month, what happens? The air conditioning kicks in and the room cools down. That's how most people are. They earn a certain amount, and then everything kicks in, and they just stop moving forward. They hit a certain level, and unless they can readjust that level, they'll never get to where they want to go. And that's most people in society. It has zero to do with intelligence, has everything to do with their emotional capacity for money. Does that make sense? So money, interestingly, is more of an emotional sport than it ever is an intellectual sport. If it was an intellectual sport, we'd all be billionaires. But it's an emotional sport. So the two things one's got to do is, first of all, figure out what you want. Key. I cannot help you if you don't know what you want. And then use a simple, proven way of going and get it. Does that make sense to everybody? Yes or no? So step one is set the goal. Step two is figure out what exactly has to be done to get the goal. If we could just jump back to the slides, please. 3, 2, 1, slides. There you go. Yay. So let's say you want to make £10,000 a month. What do we need to do in order to get there? Minimum target, please write this down, would be 100 points a week. Minimum. 8-year-old children can do this, learning the right strategy. In fact, we have a foundation now where we run a project called the Knowledge to Action Youth Leadership Summit. We take 150 kids a year, and we fly in some of the best motivational speakers, people like Tony Robbins, some of the best that there are in the world, who train these kids and give them the tools and strategies to be leaders, to be emotionally strong, to understand how to look after their health and also to look after their money. And what I do on the last day, on the Friday, is I teach kids between 14 and 17 years old one trading strategy they can learn in an hour and a half, in 90 minutes. And what they then do is they execute that trading strategy when their parents come to pick them up, and they show they can make money yet the parents can't, because the parents don't know the strategy. And it's brilliant for two reasons. One, it shows the kids you don't need to be old to get rich. And two, it teaches the parents you're old and you ain't rich. It teaches them the power of knowing a strategy. Useful tool, but you learn that really quickly when you do it. So we need to understand what needs to be done, minimum 100 points a week, and then we need to be coached on what we need to do and obviously when we need to do it. Now, how do I teach people to trade? This is really key and important. If I was going to teach you to bake a cake, the way people traditionally learn to trade is a nightmare. They go off and figure out how the flour was ground, which cow gave the milk, you know, which chicken pooped out the egg and where the butter. Is this important if you're making a cake, yes or no? Unimportant. What's important? Understand how to put the game together. When people try and learn how to trade the currency markets, they think they need to learn everything. Huge mistake. You can never know enough. You can never, ever know enough. Just learn what needs to be done and when it needs to have happen, and forget about having to own and learn and understand everything. And that's where the money is. You follow a recipe, you'll get the same results as the person who put it together to a point. You just muck around with the ingredients, and you get a poop cake, which looks like that. It's not just about a recipe. Number one, it's the recipe. Number two is you've got to figure out how the recipe's put together and what the person thinks about when they do it. And that, in my opinion, is where you need to be coached live. So perhaps someone like this. In the United Kingdom, we've been extraordinarily successful with doing that with people. And the reason that we've been so successful is that we've kept the game very simple. I could teach any of you in this room how to start producing a minimum of 100 to 200 points a week within about 90 minutes. Completely. Most of you who are smart and have used computers and know what you're doing, you could be up and running in 30 minutes if you just do what needs to be done and then get the job done. I've had amazing success. In fact, we're the largest trader coaching company now in Europe. We have another trading floor in Sydney, Australia. We've had amazing success with it because people like you have come along, they've learned what to do, and they start producing money. It's a simple formula if you keep it simple. And of course, now we run a large foundation where we contribute to it. So what are the steps? Let's have a look. There are 3 steps. Please write this down. Number 1, we've got to train you in immersion. There's no point in learning this over time. Learn it quickly. What's the best way to make money? Answer? Fast. People are like, well, it takes a long time to make money. Bullshit. Do it quickly. It's the best and the most efficient way of doing it. Learn it fast. Do immersion trainings. That's why we train you in immersion. I take 2 days and we train you, give you the skills. Then we give you strategies, and I teach you exactly what needs to be done and when to do it. Normally I teach 1 or 2 strategies at our programs because I'd rather people be focused on the strategy so they go straight out the next week and start producing money. And then thirdly, you put some money into a trading account and we start trading with you live. So you start making money live. That means we pal you up with a trader and you guys trade together, start making money. What does that look like? Well, to start with, here in London, which is our oldest trader coaching school, the one we've run the longest for 9 years now, we have a dedicated training center, which is literally 5 miles from here. And we sit you in a classroom of 50 people. And we train live with you for 2 days so you understand what to do. Secondly, we then coach you live, which then means that you've not just set up your trading account, but you know exactly what to do, when to do it, and you trade live. You watch the trader trade live. That person sits with you one-on-one, and you do it together. And when you see the money being made live, it builds the belief in you, as we said at the beginning, that you can do it too. In fact, most of the people I train these days sit there and they bring a trading account and they trade live with the trader, and they make like maybe £1,000 in their first trading session. That visceral experience of doing it live and watching you make the money live means one of 2 things. Number 1, your body and your heart believes it because it's doing it. Does that make sense to everybody? The mind believes what the eye sees generally. And secondly, it means that you're now emotionally connected to it. The likelihood of you continuing is a lot stronger. When people tell me they've gone off to a vocational course learning about financial markets, the simple question I ask is, did you do it? Did you press the button? Did you do it? That's the only point, that's the only question worth asking. If you didn't do it, the likelihood is you won't. Does that make sense, everybody? So that's critical and important. And you'll do live trader coaching. Now, we're all different. All of us have a different way of thinking and a different way of feeling. All of us, we don't know this right now, but the person sitting next to you might be a different type of trader to you. And I've discovered after teaching people like you for the last nearly 10 years that people learn in different ways. And success in this game comes from identifying what strategy works best with you. And so when I set this program up, we used to sell trading strategies. And so for this conference, I said, why don't we put them all together and just give them to people so they can learn how to use them. Let me walk you through it. I run 3 strategies. Please write these down. They're the most powerful currency strategies known to man right now. There's something called the sniper trade. Please write that down, the sniper trade. And it's an intraday strategy. I'm going to walk to you and show you exactly how it works. It doesn't take long to learn. It'll take you about half an hour to learn it seriously. and it will take you about half an hour to maybe an hour a day to implement, and I'll show you what kind of results you can get from it. There's another strategy called an income generator. This is an end-of-day trading strategy, meaning you put the trade on in the morning, you leave it for 2 or 3 days, and then you collect the results at the end. You aren't sat there watching the screen. Now, some of you will have the internal personality where you will resonate. Do you guys understand what I mean when I say resonate? In other words, you will find that you immediately get on well with or resonate well with a certain style of trading. Some of you like to trade for an hour quite actively, make your money, close everything down. Others of you like to put a trade in the market for 2 or 3 days, have it run, and then take the money out of the market. One of you is more of an intraday style of trader, and one of you is more of an end-of-day style of trader. Right now, we don't know which of you are which, but you are all either one or both of those things. And so we use what's called a discovery phase to figure out where you're going to make the most amount of money possible. What I've certainly learned is this. Every single human being in this room today could do at least 300 points a week. Guaranteed, no trouble. Anyone can do it. Anyone can do 300 points a week. I have people that do over 1,000 points a week. You should maybe set your goals there, but at least 300 points a week anyone could do. Once you've identified which strategy works best with you, and then you put the process in place of making it happen. So let's walk you through how it works. First of all, the sniper trade. Let me tell you how that works. First of all, you'll see on the right-hand side of the screen there, you're looking at a bunch of different time zones. And what we found is that there are 4 time zones that matter in the money markets. Write this down. 4 time zones that matter. There's the daily chart, there's the 4-hour, there's the 1 hour, and there's the 5-minute. There are 4 different time zones. What's important about those 4 different time zones? Let me tell you what's important about it. Different trading communities operate in each of those time zones. The interbank market, which is 80% of that $4 trillion a day, is looking at the daily chart. The hedge funds and major financial institutions are looking at the 4-hour chart. The proprietary traders, these are the guys that run big prop shop houses that take big positions in the market. They're looking at the 60-minute chart. And everybody else is looking at the 5-minute chart. So what? Here's what. When all those 4 different groups from those different trading communities are making the same decision on the same currency pair in the same direction at the same time, do you think it's likely that currency pair will move in that direction? Yes or no? Yes. And therefore, we need to be aware of it so we can harness it and use it. And in fact, it can flag a signal to us now. So we put the trade on practically in automated fashion and collect the money. So the sniper trade is something I've been teaching people to do for a long time now. It runs 24 hours a day. You can automate this so it does it literally while you're asleep. For a beginner, they can pull about 300 to 500 pounds a day, completely tax-free in London. And we sell it for £2,500. And you can just go off and run that one strategy. So that's called the sniper trade. Other people like to do end-of-day trading. They don't have a lot of time. They're busy, they're working for a living, and they don't want to sit in front of the screen for very long. So literally they want to get on there in the morning, put a trade on, and have that trade run for them. Well, this income generator captures the early move in a dominant trend. This looks at big currency pairs that move in a huge way over 3 to 4 days. And we have sophisticated software now which analyzes and picks up these trading opportunities. This simply is a case of being disciplined enough to be told what to do. And for some of us, that's quite difficult. But it tells us what to do and when to do it. It says, here's the setup. It says, this is the currency. It's now moving upwards. It says, here's a currency. It's been moving down for a few days. And as it moves down for a few days, these are daily bars. This might be Monday, Tuesday, Wednesday. Then suddenly something happens. There's a signal here that happens. There's a multitude of different signals. Like 6 or 7 things have to align. The stars have to align up, if you like, on this. But when they do, a signal is generated. And all we do is we put an order in to buy that currency. And we hold it, and we have a stop loss which protects us right at the pivotal point of where it bounced. And we let it run for 3 or 4 days. How much time do we then need to sit in front of the screen analyzing this? Practically 0, nothing. We just let it run. And then every day, the little stop loss in an automated fashion is moved for us. And just by doing this for maybe 45 minutes a day, just checking the trades we've put on, at the end of the week, in today's market, we're looking at having 300 or 400 points. That means as a beginner, you're looking at having like £3,000 to £5,000 a week just running this on its own. And it takes 45 minutes a day to set up. This makes you incredibly time rich. and obviously gives you a fantastic income stream at the same time. So people who often work for a living literally run this strategy. This is your get out of work strategy. This is the one I use to get myself out of the investment banking world to set myself up as a trader at home, because it made me more money than I could possibly make at work doing it from an automated fashion from a screen. Okay. The income generator, again, it's end of day. So write this down. Income generator is end of day. It looks to generate £2,000 to £5,000 a week. We sell it for $2,500. People just go off and they run it. We show them how to implement it, and then they use that full time. The last one is called pivot trading. And this is where if you remember when I first walked on stage today and I showed you how to make £19,000 in 4 minutes, this is the strategy that's used by professional traders. And here's why. It shows you where to get in and where to get out. It shows you where the ceiling of the market is and where the floor of the market is. It takes 15 minutes to set up. It's a little bit more advanced. You might not know this is the one that resonates with you. It might be. We sell it for $2,500, and you look to make £2,000 to £3,000 a week trading this. Again, in the United Kingdom, it is completely tax-free. So, the question I have for you is, do you guys think you can do this, yes or no? Are you sure? When Tony was on stage, you said yes a little bit louder. Do you guys think you can do this? Repeat after me. Yes, I can. Yes, I can. You can do better than that. Yes, I can. The question is, why are you not? And the answer to that question is, you've probably never done it live with a professional trader before. True or false? That's probably true. You might not know the strategies, and you may have some fear of the unknown. My point is, start now.
Is there such a thing as a perfect number? Yes, there is. And this is it. It is known as the golden ratio and sometimes the divine ratio. Why divine? Well, this mysterious number seemingly sits at the core of everything we understand about the universe. You'll find it in the formation of galaxies, the shape of a flower. It is hidden in the faces of people you know, and in the relative sizes and proportions of the human body. We find objects proportioned with it aesthetically pleasing. So it's no surprise that it's even found in great works of art, music, architecture, product design, and in scientific and physics principles all through time. It seems that there is very little in the natural world that doesn't have this number hidden in the workings somewhere, and that includes the world financial markets. How is it possible that a single recurring sequence of numbers seems to be at the heart of nature's design? Is the entire universe bending to its whims? And most importantly, can we use this information to our advantage when placing trades? You may be surprised to know the answer is yes. Yes, we can. But how? Well, that's coming up right here, right now. Welcome back once again to the Trading Den. Thanks, by the way, for all of your recent comments and participating in our most recent quest. We've had some incredible feedback, and my team and I are truly grateful to all of you for the valuable contributions you've made. I really believe we are growing something special here. Today, we are going to be talking about Fibonacci levels, the golden ratio, and how we can use these concepts to help choose our entries, take profit, and most importantly, our stop loss levels. Now, if you've seen any of my other videos, you'll know the name of this game is knowing where to get in and where to get out. Anything we can do to fine tune these three price levels is potentially going to benefit us. Now, for all of you holy grail seekers out there, I don't want you to get the impression that this is going to be the holy grail just because of some mysterious origin of the tool that we're talking about. Like I've said many times on this channel, there really is no holy grail in the world of trading. In fact, if there was, everyone would be using it, and then it would very quickly stop being a holy grail precisely because everybody was doing it. I do, however, have a consolation prize for for the holy grail seekers out there, and that is the fact that if there ever was a holy grail in trading, then it would be the instructions on how to follow a structured, well thought out trading plan, and I explain how you can get started on that in this video here. So what is the golden ratio and the Fibonacci sequence? Well, to answer that, we're going to need to do some complex maths. In mathematics, two quantities are in the golden ratio if their ratio is the same as the ratio of their sum to the larger of the two quantities. The figure on my right illustrates the geometric relationship expressed algebraically for quantities A and B, where A is greater than B and B is greater than 0. Here the Greek letter pi represents the golden ratio. It's an irrational
number that is a solution to the quadratic equation. To say that the golden ratio pi is rational means that pi is a fraction n divided by n, where n knows, so to make that n to be less than n to be positive.
But if n divided by m is in the lowest terms, and then the identity labelled above says
n divided by n minus n is in the lowest term, that is a constant which follows from the assumption that pi is rational. If that would be x equals a, and x equals a equals a, alpha because of the bisection CAB equals a because of the similar triangle, a equals 2a from the original isosceles and b equals 2a by 4.
Now, why did I speed that section up? Because you don't need to know any of that stuff. In truth, trading is really about understanding a few basic concepts, such as risk management, support and resistance, chart patterns, and combining them to start out small. Your greatest leaps forward are going to come from the practical application of these concepts, not from the understanding of the maths behind them. You could spend years crunching numbers and equations, buying every book you can find on theory, and spend your entire life studying them all without ever placing a single trade. You won't go very far with that approach. However, learn the tools, learn the strategies, and find out which one resonates with you. Put them in a trading plan that you create on your own with the help of a mentor. Then follow that plan. That, I promise you, is the quickest road to success. The key things you need to take away are that the Fibonacci sequence is really just the golden ratio in a sequenced numeric form. The Fibonacci tools are based on the Fibonacci sequence, and they are useful aids in attempting to predict where a market is likely to reverse. Now, these things are real. They exist and are used by traders all around the world, and that is important. Why? Well, when hundreds of thousands of people are using the same series of levels to make buying or selling decisions, there is a propensity for those levels to become real. That is to say that markets are more likely to turn at those levels precisely because so many are looking at those levels. And this is sometimes called a self-fulfilling prophecy. So the assumption we make is that if a particular method has a large number of proponents, that is a method we should be looking at. Let's have a look on SmartCharts. The Fibonacci toolset inside of SmartCharts is quite extensive. If you're already a SmartCharts user, you're going to find a fully featured suite of tools that you can access by clicking the Drawing Tools icon, like this. Now click here and voila. There's 1, 2, 3, 4, 5, 6 tools currently available. There's Fibonacci arcs, ellipses, extensions, fans, retracements, and time zones. Now, you can do all sorts of crazy things with these, but the specific tool I want to talk about today is this, the retracement tool. Now, the really great thing about SmartCharts is that it's very simple for a beginner to use. It has the e-learning section, visual trading, and the drag and drop markers. However, as you progress further along the path and start to grow as a trader, you're going to find it has all the tools you need as an advanced user. Like, for example, these Fibonacci tools that you can park as a beginner, but then come back and explore when the time is right. It's not the case here that you need to start with something overly simple and then jump platforms when you outgrow them. Then you have to go through a learning curve all over again. SmartCharts is something you can grow with throughout your entire trading career. So we now understand the origins of these tools and why they're important to learn and where to find them in SmartCharts. Now let's talk a bit about retracements. All markets move in phases and cycles. Now I've talked about this before in earlier videos, but as a quick recap, no market will ever move in one direction. There is a constant ebbing and flowing back and forth. This is because there are constant cycles of buying and selling. Even when a market is moving steadily upwards, major players will be looking to take profits on their positions, causing the market to fall for a while before the next wave of buyers jumps in. We therefore tend to see a pattern of higher highs and higher lows in a market that is moving upwards. And that is how we identify an uptrending market. The game then becomes, how do we know when this temporary movement against the overall market direction is about to end, signaling a resumption of movement in the major price direction? Now, in the past, I've gone through quite a few price action signals we can look for that may indicate a price resuming to its major price direction. I'd highly recommend that you look at some of the earlier content on this channel if you want to go through some of those signals. But today, let's look at how we can use the Fibonacci retracement tool for this purpose. Okay, so let's have a look in context at how we would use the Fibonacci retracement tool. We really use it to understand how far a position can go and, most importantly, where to get into a position. So I want you to look, first of all, and I've made the chart look as naked as possible because I don't want the confusion of any indicator or anything else there for you to focus on. I just want you to look at price. We're looking on a 1 hour chart, perfect for Fibonacci. We're looking at Euro Sterling, and I want to give you some context that I'm a trader that is bearish on the Euro Sterling. So I'm looking for a short entry position. I may have been short before and closed my trade, or I may be looking to go into the position short. But I can see this high point on the chart. I can see this low point on the chart, and I can see that the market from that low point has started to rally back up. Now, I could say, well, yes, it's in line with, it's still in a downtrend. This is a phase 2 movement. You remember that phase 1 was the prevailing movement. The phase of the movement down is moving with the trend. We call phase 1 movement is when the market is moving consistent with the overriding trend, meaning if this is a short market and the euro is falling down, then this is really phase 1. Phase 2 is when the market then pulls against this is the retracement, if you will, against the trend. But then we want to know, well, when does the prevailing trend resume, that downtrend? When do we get in short? Obviously, we don't want to, the problem with placing a short trade here is what happens if the market rallies? Well, then we're going to lose money. How do we know that there is enough traders looking at this short entry? And how can we use that Fibonacci sequence of numbers that on a Euro Sterling 1 hour chart that all the currency traders around the world, this is a classic usage of the tool. As I said before, the most important usage of Fibonacci is the retracement because it's helpful. You can draw fans and arcs everywhere you like, but when you use the retracement tool, it shows you specifically where the market is going to get most resistance if you are looking to enter this kind of position. So let's go into drawing. Let's go to Fibonacci. Now you'll see, as I went through before, all of the relative tools that we have. It's the retracement is the powerful one that we want. So we take Fibonacci retracements. Now I want to take that high point. Notice how I put the crosshair at the top. And as I start and I hold my mouse down, so I like to use an external mouse sometimes, and I drag it down to the bottom low point. Now you'll notice how those numbers are changing on SmartCharts. And as I move that line up and down, of course, those relative Fibonacci numbers, which of course is 0, 23%, 38%, 50, 61, 78, and then all the way back up to 100, draw on the chart in real time. And of course, the relative values, which of course that would be in terms of the Euro Sterling rate on the chart, is written in brackets next to those Fibonacci sequence numbers. So I'm going to go from the high point here, and I can put my dot right on the low point, but I'm actually going to stretch out to the side here. And there's a reason for that. As long as my dot at the bottom there is consistent with the low point, you can see that by the shadowing. I want to make sure I'm right on the low point, but I want it to the right so I can use it. So I'm going to drop it just there. And then you can certainly see, now we can see the market from the high here to the low point here. This is the 23%. We've got the 38 and the 50%. Now, we expect many traders to be looking at that 50% line, and we expect to get a fair level of resistance on that line. Therefore, that line, when combined, for example, with an ATR 10, which is a volatility measurement of 10 periods, which tells us if how much the market's moving around. If we use a bit of ATR 10, which tells us where to place our stop loss, the other side of the 50% line, we can see that we are clearly getting a reaction here off the 50%. You can see we're also, it's interestingly enough how these lines seem to match up with price action, but the 50% is what I want you to focus on. The 50% says very simply this, and this is your key message. If we cross the 50% and get to the 61 and get through the 61, the probability for a Fibonacci trader to get back to 100% is strong. We would not look to be taking short positions, therefore. But we're looking to go short here on euro sterling. That is our game play. So we expect the resistance at 50%. We're getting the resistance of 50%. That confirms to us, as expected, that many traders are looking to continue this short push. And so therefore we'd be looking to take a short position, notwithstanding keeping the stop outside of ATR 10 to make sure we don't get stopped out. So our stop would be above, our entry would be below, and we would be looking at a minimum to run to, of course, our 23% line or, of course, our 0% line. But our first port of call is our 23% now. Now, you can see the profitability between where we would enter on this 50% line with our profit target down to the 23% line. We've got a fair movement there for a very short amount of risk, or a very small amount of risk, and that's critical. That's where the power in Fibonacci is. The key with successful currency trading is, first of all, know where the herd are making their decision. Have a place you can put your stop loss, which is protected, which of course, look at the protection you're getting off a 50% fib line on a 1 hour chart on euro sterling, massive. And then look at the predictability of where we can run to. So this does the job for you. It tells you, number one, first of all, are we getting the resistance as expected at the 50%? Yes, we are. So have we got a short trade on? Yes, we have. Where can I place my stop that's protected above that 50% line? Factor in ATR 10. I'll give you a little bit of breathing space. Then how do I plan the profitability of my trade? Well, you plan that by targeting that 23% line. And look, in SmartCharts, dead simple. We place a short position. You just now drag these lines, as simple as that, consistent with the lines on the chart here. So I put my 23% line here. I've got my entry just below here. That's now plugged everything in. I then hit the green button, and that trade is now played. Well, after I agree to the reduced risk, the trade is on. So the real rule of thumb there with this retracement tool is, of course, we draw it diagonally from the top. Of course, you can use it both ways round, but here I'm using it from a short perspective. I'm focusing on that 50% tool, because if I get a rejection off that and we resume in that phase one movement of a short trade, it gives me a beautiful place to put my stop loss, a great place to put my target profit. And of course, I've got that herd behind me that are making the same decision around the 50%. Now, you may also remember that I am a trader that loves to use pivots, and if you haven't seen my videos on pivots, there's a video there you can click and see how I do my early morning pivot trading. Pivot points are mathematical calculations which help us understand the high and the low of the previous day's trading activities. And then what it does is it transposes that into the current day's trading session and really gives you an understanding of where the floor is, where the ceiling is of the market. And they're defined by the main pivot point line, as I'm sure you're aware. And then the R1, R2, and R3, and of course the S1, S2, and S3 lines. Those lines, should I say, can be vastly improved if they are combined with Fibonacci. Now, most trading platforms don't have that tool. Most professional trading floors that I have worked on around the world with precision Fibonacci traders and who use pivot points use Fibonacci adjusted pivot points. Now, a very difficult tool to get hold of. However, we did build it in SmartCharts. I'm going to show you where that lives right now. So if I could take you to my pivot area, you can see that the pivot points I'm using on this are not normal pivot points. They are Fibonacci adjusted pivot points. I'm going to show you where you can put those in on the chart. So again, this time I'm going to go to indicators, and I'm going to go to, you can see I've got Fibonacci pivots on the chart. And all it's done is it's amended, it's upgraded those pivot point lines in line with Fibonacci sequence. Does it improve your pivot point trading? Listen, we wouldn't have built it if it didn't. So what it does, it gives you much stronger lines. Now, if you're somebody that's not used to using pivot points and haven't used those in the past, I suggest you watch one of my pivot trading videos from this channel. It shows you exactly when to get in, when to get out. Pivot trading is powerful because, of course, it shows you in context, regardless of time frame, but we normally place this on the 5-minute or 15-minute chart. And then we use the Fibonacci pivot point lines to show us really where those major R1, R2, R3 levels are if we're going long, or where those S1, S2, S3 levels are if we're going short. So it's an incredibly powerful tool. It's already built into SmartCharts, as you know. And when you place that on there, you're getting better adjusted lines. You can see that because look at the Fibonacci. We've got a Fibonacci R2 level here. It's creating a hell of a lot of resistance on the euro dollar right now. A contrarian trading strategy for this could well be in conjunction with the MACD signal confirming a short position from this R2 line back down to the blue line. So it's basically pivot points upgraded. As a takeaway, guys, Fibonacci tools are used by a lot of traders in the financial markets. In fact, If you go onto any professional trading floor, you're going to see Fibonacci tools, especially being used on the major currency pairs. Remember, the Fibonacci sequence is less powerful with those big exotic pairs. So your majors, euro sterling, all the euro pairs, dollar pairs, that's where you're going to have the action, certainly with sterling as well. They're helpful in finding where the market may resume its major market direction, which is the example we just did with euro sterling. Remember that 50% line, that's the key level. If that gets breached and we get to the 61, we're going to turn that trend. And remember this, that it's easy to implement in SmartCharts. All the work's been done for you. And if you're somebody that loves pivot trading, which I recommend everybody do, it's my favorite trading strategy, to have those pivot points upgraded to the Fibonacci sequence really gives you a cutting edge. Okay, and remember, for my YouTube subscribers, I'm giving you an exclusive 7-day trial of SmartCharts. That's my gift to you. And you can grab that by clicking the link in the description. Now, 7 days includes the strategies, the tools, and the free access to many hours of educational content that is included on the platform. And let me tell you, if you like what I can do on this channel, you're gonna love what I've spent 2 years sweating under hot studio lights to create in SmartCharts. The training is clear, it's structured, and it takes you on a journey from start to finish using the 6-step trader cycle with hundreds of pages of supporting documentation. And it's free of charge for 7 days. Take it with my blessing. All I ask is you leave me a comment in the channel telling me what you thought of it. Now listen, if you love this video, don't forget to hit like. If you're not a subscriber already, get yourself on the subscription list. And until then, I look forward to seeing you in the trading day. By a lot of traders, but let's start that again. So let's just, such as euro sterling, sorry, I'm burping. Very difficult to talk whilst burping. Hi guys, well today we have a special session for you today in the trading den. But it's just me in the trading den. My entire crew, cameramen, the mixers, the producers, the script writers, not that we really use script writers, but we do have people who kind of collate all the questions and so on that we have on the channel. They're all gone. It's literally just me in the trading den. But therefore, today it's just you and I exclusively here, and I'm therefore going to teach you one of my favorite tools of all time. Today, I'm going to teach you how to place and trade and profit using Power Pivot. That is going to be covered right here, right now. Okay guys, so here we are in the trading den. It's very eerily quiet. But that's good because it gives us some lovely concentration time. And today I'm going to show you the tool that kicked it all off for me. And it's all about pivots. In fact, many of you might have Googled me on the internet and seen me make £19,000 in about 4 minutes. Trading sterling, I think it was, back in those days. God, it was over literally 15 years ago, that particular trade. I'm going to show you today how I use Power Pivots. Now, Power Pivots is a real precision way of making money in the markets. For those of you who are trading throughout this coronavirus time will realize that the markets have literally gone mental. 2008's got nothing on what's going on right now. The market volatility, look, I'm going to say this straight off the bat. Market volatility right now will crunch you in half if you don't know what you're doing. Because right now, volatility is utterly fantastic. However, the swings and the movements, as those of you that are looking at the markets are probably aware, are pretty insane. And for that very reason, we are having a field day, but you've got to know how to handle intraday volatility. If you are unsure, you need to go back and look at my video on the ATR, which is the average true range. That's a cracking video, which is going to show you how to measure, look, where you should be putting that stop loss. If you look at the euro dollar, in fact, let's have a quick look at the euro dollar right now. I'm just going to jump to a regular chart. Let's break up euro dollar just on the daily. Let's just take a look at the daily chart. I mean, just look at the vast swings that we've got up and down that's happening on euro dollar. Same thing is for sterling. Let's just go British pound against US dollar. And you'll see. Hold on, I haven't got these ones sorted in the list. There we are, there it is. Same kind of picture with sterling. So big swings up and down. You know what's happening right now. We're getting deaths every 5 minutes from different countries around the world. You've got Donald Trump saying all sorts of crazy things. You've got Boris Johnson who's who's the Prime Minister of the United Kingdom, has just come down with coronavirus, as has the Health Secretary. So it's all a bit mental. We're thinking the UK may be in lockdown till June, and the Deputy Health Minister has now just said that could even be extended to December. So who knows what the hell is going on? I can tell you one thing, for currency traders, whilst from a humanitarian perspective, this is a disastrous time. And of course, many people are losing their incomes. Many people are having to really reevaluate how they're going to live their lives this year. Currency traders are having a field day. I mean, let's be really clear about that. There is volatility out there. And what we don't want is flat, snake-like markets. We want markets which are raging up and down. You only need to look at this chart to see that markets are raging up and down. So there is opportunity out there. The question then becomes, responsible trader, how do I harness, how do I tether that bull, and how do I make sure I can use it in a productive way to make money rather than just get slopped around, because there is a lot of slopping around going on out there. I'm going to introduce you now to a trading tool I've been using for literally the last 25 years. It's the concept of trading pivots or using pivot points. So this is power pivot points. We're going to get into that right now. So let me just jump to, if you look at my screen, you'll notice that I've got a little button here called Morning Pivots. And really what I'm doing here is I've set my screen layout in SmartCharts so I get a good view on what the markets are doing. Now, if you look how I've organized this, and if I put my mouse here, you can see I've got my four screen layout is detailed as the following. I'm going to tell you how I do this so you can set your SmartCharts up to be exactly the same as mine. So you'll notice that if I click here, I can grid my charts for 4 charts. You want to make sure that's selected. Top left-hand corner, we're going to have the daily chart. That's D1 daily chart. So you select daily here, and you just literally pick daily. No strategy here at all, not useful, because we're literally going to do this as a manual setup. You'll see how the whole thing comes together in a second. Now you'll notice the green dotted line here is the 200 period moving average. Now that is the guideline for, is the market in an uptrend or a downtrend? It's a very broad kind of indicator which says, look, if the markets are trading underneath that 200 period moving average on the daily, we're looking at short positions. Now, we then move over to the next screen on the right-hand side, and you'll notice there's a green spot. Now, let me just click on that green spot. And what I've done is I've series linked these charts together, which basically means that whatever currency I select on any of the charts on this screen, it will update all the other charts. And the reason I'm doing that is I'm just using these 4 separate windows to have just a different view on the same world. Of course, right now I'm looking at dollar Swiss. That's USD/CHF. And you'll notice I've picked the same color. So they're all the same color links. If I confirm that, it just means if I change anything here, it will update all the screens. See, look, I've just clicked on Sterling Kiwi and it's updated all those screens. Let me go back to the dollar Swiss though, because I want to focus predominantly on that. There it is. Right, now, you'll notice I've created a green dotted line, which is going to be the 200 period moving average. If you don't know how to put that on your chart, let me just quickly show you how to do that. You come across and you hit here indicator, and I've got in here EMA. So you just type in here EMA and it brings up the exponential moving average, and then on it goes. Now let me show you how you edit the exponential moving average. Let me just remove one because you don't need 2 moving averages of the same number. I just then hit this cog, this settings button here. And all I've done is I've said source is closed, it's exponentialized, which means it gives more pricing relevance to more recent pricing data. So that's exponential. The style I've picked is dotted, nice fat line 4, so it's obvious, and I've made it green. I update that. And that gives me that dotted red, that dotted green line, which is the 200 period moving average. On dollar Swiss, you can see that price is underneath the 200. So that tells us that's a tick for a short. Then we move across to the 4-hour chart. Price is underneath that. That's a tick for a short. Then the bottom left screen, now notice I've just added the same indicator to all of those screens. I can even save that profile of indicator if I want. All I just would do is I hit the save button here, and I can call this, I don't know, call it Greg Pivot, if we like. And I can say save that, and that's now Greg Pivot. Then if I then open it, if I then want to add it onto here, I'll just hit Greg Pivot, hit the plus, and it adds it to there, you see? So boom, done. But obviously I want to keep it nice and simple like that. So I can add, let me just close that. I can add any of those profiles or templates I want to any of my screens. That's completely acceptable. Now, bottom left-hand corner, I've got the hourly chart, so I can see price is again underneath that 200 period moving average. And then here, and this is the interesting one, is my 5-minute chart, okay? And that is the one that I'm going to have my pivot lines on. So what am I looking to do? Well, let's open up the action window is the window which is bottom right. That's the one where all the trading activity is going to take place. So I'm going to open that window right now, and you'll see if we can just drag this down. Now you can see this main pivot point line. Let me just change my my cursor to a grab tool. Let me just see if I can bring this now. Okay, great. So you can now you're getting an understanding. Now you can see price is sitting right in the middle of that main pivot point line. So what is a pivot point line? How are these pivot point lines calculated? What is the game all about? Pivot point lines are calculated from the previous trading session's activity. So you'll notice the main blue line is an important, that's called the main pivot point line. If the price is below that line, we look to take short positions. If the price is above the blue line, we'd look to take long positions. However, we would not be taking a long position here because we're actively seeking short positions here. So if you look here on here, we would wait for this price to break below the blue line, and then we would run it just north of the first red S1 line. So this is the support first S1 line, this is S2, and lower down here will be S3. Above is R1, which stands for resistance line 1. This is resistance line 2, and of course this is resistance line 3. So on the dollar Swiss, I can take this trade on. Now let me show you how you can kind of make this a little bit better. So I would take this trade on if I get a confirmed break below that pivot point line. Now you can see markets in the dollar Swiss market are sitting right on the pivot point line. There's really no major direction moving here. That's okay, because that means it's potentially going to break down or break up. If it breaks up, I'm not interested in placing the trade whatsoever. I'm only interested in placing a trade which would go short. Because why? Because I've got all the major market direction in my favor. Look to the left. Is the price below the 200 on the daily? Yes, it is. Is the price below the 200 on the 4 hour? That's this top right hand chart. Yes, it is. Is the price below the 1 hour on the 200? That's the bottom left chart. Yes, it is. And then finally, where I do my work, my action is here on that bottom right chart. Now hit the middle button there on SmartCharts, which will expand that screen so I can really see what I'm doing. You'll see price is now stuck onto that pivot point line. That is an uncertain market. That's okay. When market gets some direction, if it continues in the same direction, physiology of the other major time frames, when we're looking up to get our major time frame direction, that daily, that 4 hour, that 1 hour, which is pushing down, we want to set ourselves up to catch this little fish if it's going to move in our direction. Let me show you how you do that. So all I'm going to do here is I'm going to hit the short button. Now I'm going to move my lines around. So I hit the short button and I say, look, I'm going to take profit north of the red line. I'm going to have my sell entry. And if I'm smart about this, I move my short line just south of where we've had this. So I'm going to let it clearly break through that major pivot point line. And I want my stop loss to be up here. So I've got some nice protection. So you can certainly see, look, I'm risking £2,000 to make 2,600 USD/CHF. And you'll notice I've picked the same color. So that, let's be really clear about that. There is volatility out there. And what we don't want is flat snake-like markets. We want markets which are raging up and down. You only need to look at this chart to see that markets are raging up and down. So there is opportunity out there. The question then becomes, responsible trader, how do I harness, how do I tether that bull, and how do I make sure I can use it in a productive way to make money rather than just get slopped around, because there is a lot of slopping around going on out there. I'm going to introduce you now to a trading tool I've been using for literally the last 25 years. It's the concept of trading pivots or using pivot points. So this is power pivot points. We're going to get into that right now. So let me just jump to, if you look at my screen, you'll notice that I've got a little button here called Morning Pivots. And really what I'm doing here is I've set my screen layout in SmartCharts so I get a good view on what the markets are doing.
Now, if you look how I've organized this, and if I put my mouse here, you can see I've got my four screen layout is detailed as the following. I'm going to tell you how I do this so you can set your smart charts up to be exactly the same as mine. So you'll notice that if I click here, I can grid my charts for 4 charts. You want to make sure that's selected. Top left-hand corner, we're going to have the daily chart. That's D1 daily chart. So you select daily here, and you just literally pick daily. No strategy here at all, not useful, because we're literally going to do this as a manual setup. You'll see how the whole thing comes together in a second. Now, you'll notice the green dotted line here is the 200 period moving average. Now, that is the guideline for is the market in an uptrend or a downtrend. It's a very broad kind of indicator which says, look, if the markets are trading underneath that 200 period moving average on the daily, we're looking at short positions. Now, we then move over to the next screen on the right-hand side, and you'll notice there's a green spot. Now, let me just click on that green spot. And what I've done is I've series linked these charts together, which basically means that whatever currency I select on any of the charts on this screen, it will update all the other charts. And the reason I'm doing that is I'm just using these 4 separate windows to have just a different view on the same world. Of course, right now I'm looking at dollar Swiss. That's USD/CHF. And you'll notice I've picked the same color. So they're all the same color links. If I confirm that, it just means if I change anything here, it will update all the screens. See, look, I've just clicked on Sterling Kiwi and it's updated all those screens. Let me go back to the dollar Swiss though, because I want to focus predominantly on that. There it is. Right, now, you'll notice I've created a green dotted line, which is going to be the 200 period moving average. If you don't know how to put that on your chart, let me just quickly show you how to do that. You come across and you hit here indicator, and I've got in here EMA. So you just type in here EMA and it brings up the exponential moving average, and then on it goes. Now let me show you how you edit the exponential moving average. Let me just remove one because you don't need 2 moving averages of the same number. I just then hit this cog, this settings button here. And all I've done is I've said source is closed, it's exponentialized, which means it gives more pricing relevance to more recent pricing data. So that's exponential. The style I've picked is dotted, nice fat line 4, so it's obvious, and I've made it green. I update that. And that gives me that dotted red, that dotted green line, which is the 200 period moving average. On dollar Swiss, you can see that price is underneath the 200. So that tells us that's a tick for a short. Then we move across to the 4-hour chart. Price is underneath that. That's a tick for a short. Then the bottom left screen, now notice I've just added the same indicator to all of those screens. I can even save that profile of indicator if I want. All I just would do is I hit the save button here, and I can call this, I don't know, call it Greg Pivot, if we like. And I can say save that, and that's now Greg Pivot. Then if I then open it, if I then want to add it onto here, I'll just hit Greg Pivot, hit the plus, and it adds it to there, you see? So boom, done. But obviously I want to keep it nice and simple like that. So I can add, let me just close that. I can add any of those profiles or templates I want to any of my screens. That's completely acceptable. Now, bottom left-hand corner, I've got the hourly chart, so I can see price is again underneath that 200 period moving average. And then here, and this is the interesting one, is my 5-minute chart, okay? And that is the one that I'm going to have my pivot lines on. So what am I looking to do? Well, let's open up the action window. Is the window which is bottom right. That's the one where all the trading activity is going to take place. So I'm going to open that window right now, and you'll see if we can just drag this down. Now you can see this main pivot point line. Let me just change my my cursor to a grab tool. Let me just see if I can bring this now. Okay, great. So you can now you're getting an understanding. Now, you can see price is sitting right in the middle of that main pivot point line. So what is a pivot point line? How are these pivot point lines calculated? What is the game all about? Pivot point lines are calculated from the previous trading session's activity. So you'll notice the main blue line is an important, that's called the main pivot point line. If the price is below that line, we look to take short positions. If the price is above the blue line, we'd look to take long positions. However, we would not be taking a long position here because we're actively seeking short positions here. So if you look here on here, we would wait for this price to break below the blue line, and then we would run it just north of the first red S1 line. So this is the support first S1 line. This is S2, and lower down here will be S3. Above is R1, which stands for resistance line 1. This is resistance line 2. And of course, this is resistance line 3. So on the dollar Swiss, I can take this trade on. Now, let me show you how you can kind of make this a little bit better. So I would take this trade on if I get a confirmed break below that pivot point line. Now you can see markets in the dollar Swiss market are sitting right on the pivot point line. There's really no major direction moving here. That's okay, because that means it's potentially going to break down or break up. If it breaks up, I'm not interested in placing the trade whatsoever. I'm only interested in placing a trade which would go short. Because why? Because I've got all the major market direction in my favor. Look to the left. Is the price below the 200 on the daily? Yes, it is. Is the price below the 200 on the 4 hour? That's this top right hand chart. Yes, it is. Is the price below the 1 hour on the 200? That's the bottom left chart. Yes, it is. And then finally, where I do my work, my action is here on that bottom right chart. Now hit the middle button there on SmartCharts, which will expand that screen so I can really see what I'm doing. You'll see price is now stuck onto that pivot point line. That is an uncertain market, but that's okay. When market gets some direction, if it continues in the same direction, phaseology of the other major time frames, when we're looking up to get our major time frame direction, that daily, that 4 hour, that 1 hour, which is pushing down, we want to set ourselves up to catch this little fish if it's going to move in our direction. Let me show you how you do that. So all I'm going to do here is I'm going to hit the short button. Now I'm going to move my lines around. So I hit the short button and I say, look, I'm going to take profit north of the red line. I'm going to have my sell entry. And if I'm smart about this, I move my short line just south of where we've had this. So I'm going to let it clearly break through that major pivot point line. And I want my stop loss to be up here. So I've got some nice protection. So you can certainly see, look, I'm risking £2,000 to make 2,600. And why have I put it just north, let's say, of this R1 line? Because you're going to find that price is going to bounce off there. If it drops through here and enters me short, for it to come all the way back and break through the main pivot point line and break through the R1 line, it's a dumb trade. It's a duff trade. It hasn't worked out. But I'm giving myself plenty of protection. I'm putting my stop loss behind the main pivot point line, which is now has got to break through to go short. And I'm putting my stop loss above that R1 line. That's really going to be important. That's going to give me lots and lots of protection. Plus, I've got more profit to make than I'm risking, but it nearly is a 1-to-1. Profit is a little bit more in my favor. So I like the look of that trade. I've got all the major market direction in my favor. The price would have to break down through the pivot, and I'm making sure that it's breaking through enough of this support, which is formed just underneath the pivot point line. So I want to make sure that I get through the pivot point line. I want to make sure I break through the price support that's there, and then it's on its way. To victory. My take profit should be north. Should be north of that major support line. So it's basically a 1-to-1 nearly kind of trade. I like the look of it. I then just hit go. And then that is all set up and it's ready to trade. Let's have a look at a couple more just to give you an understanding of how that works. But hopefully you can see there's a structure to this. There's the daily, there's the 4 hour, there's the 1 hour, and then the action happens on that 5-minute chart. Let's look at a couple more. I did spot Euro Yen this morning, so I can literally, these are all series linked, so I just click on one and it should update all of my charts. There we go. So again, I've got price on the daily, which is below the 200, as you can see. I've got price just below, around the 200 on the 4 hour, price just below the 1 hour. Like this look. We like the look of this because we're just breaking through those 200 on the daily, on the hourly or on the 4 hour, which means we could have a good push from here. Let's open up the 5-minute chart. Now we can see what's happened here. Well, on the 5-minute chart, We're already through the main pivot point line. That happened this morning. Look at that. High test off this morning. Lovely run down. The move's already happened on that. Okay, fair enough. So what happens? How else can we play this? Well, we can look, if the market comes back and touches again towards the 200, that can give us an opportunity to go short. We can put a short position on that, no problem whatsoever. And that means that then if it does, we can put a sell stop here with a stop loss. Let's put that in. So I can put my stop loss above. I can put my sell entry if we hit around this level here, and I can put my take profit right back down to where it was before. That should then give me, let's have a little look. Yeah, I'm gonna put my stop loss just north of the pivot point line, because that is going to give me enough resistance protection. Quite happy with that. There's no point in putting it all the way at R1 because we can see the range where the euro yen is. You can see what happened early this morning. Touched up through the pivot point line, fell, hit a lovely good old 70 pip run this morning. Could go ahead and do that this morning. So I can just leave this bait in the water. If the market comes back and touches that, I'm going to be short at this level here, which is short of 119.85. Stop loss at 120.31. And my take profit, if I can use my eyeballs, 119 spot sort of 20 or somewhere around there. 20, no, actually 15, I think. Yeah, 13. Okay, 119, 13 or 11. Doesn't matter. It's there or thereabouts. In fact, actually I want it. Yeah, let's go 11, 119.12. That would be the preferred number. So yeah, my profit target is 3,300. I'm going to take, my trade size is 6 lots. By the way, if you're concerned or you're worried or you don't understand how to trade size properly, SmartCharts does this so beautifully and so elegantly. On the right-hand side here, look, I just put in the risk on my ultimate account. There's 104 grand in this account. So I'm only going to risk 2% of my account. Then SmartCharts cleverly figures out how many lots I should use, or if we want to do spread bets or pounds per points or contracts for difference. It really doesn't matter. You can actually trade size in a variety of different ways. Pounds per point, lot size, cash amount, whatever you like. Anyway, so on the euro yen, you can see again, I've got all that trade confluence is what we call it in the mix. So I now can hit, I can put my expiry, because it's a pivot, is end of day. So I'm going to stick that on end of day. In other words, if it doesn't happen by the end of today, those pivot point lines are irrelevant. So I want this trade taken off the table. I didn't do that with my last trade. Let me show you how you go back and do that. I literally can shrink the screen right down. Then I go back to trade. You'll see the 2 trades I just put on. Let's put pending here. And the first one I did was that dollar Swiss. And you can see that trade is in. And there's my expiry. I put no expiry on that one. So I want to go and change that trade. So let me pick this one back up. There we go. So I've clicked on it. Now watch. If I bring the trade ticket, change my expiry here, and I put end of day, and then I hit OK, it'll then put the end of day, which means it's going to be in 9 hours and 23 minutes. And there you go. You can see the countdown clock is ticking. So if I go back to my charts, let's just have a quick look at sterling. Last one I want to have a look at, and then you'll get a good understanding. You can see now it's put a dotted line. Do you see the dotted line on the top? That is when the trade expiry is going to happen. If I open up this screen here and I scroll along, hold on, you'll see this dotted line. That dotted line says this trade will be taken off the table if it hasn't triggered at this point. So that gives you an understanding of how the trade management system works, okay? And let's just do one more. A little sterling trade again. So we've got price. We haven't got confluence here. Price is above the 200 on the hourly. Was it sterling Aussie? Perhaps I was looking at this morning. Yeah, you've got a lack of confluence here again. So you've got price above. Here we go. This is a bit better. And you've already had the reaction. So sterling Aussie price above the 200 on the daily, as it is on the 4 hour, as it is on the 1 hour. Bringing up then the action charts for these pivots. Look at this. I mean, this is a volatile market, no less, right? But let's just bring that across. So this is your 5-minute chart. Now you can see price has broken up through the 200, through the main pivot point line here. Your profit target would be the R1. We're not in an ideal situation to enter this trade for obvious reasons, because it's either in play. I don't like the look of trading this above that, so that's not something I want to do. But you've got the 2 ones on there, the euro yen. The reason I wouldn't enter this one is because either we would want to make sure we've cleared this these intra These would be intra-pivot point resistance areas, and we want to get it on a break through the main pivot point line here. That's already happened, so that's not to be traded right now. But the Euro Yen one we can keep watching, and the dollar Swiss one, have a look yourself on your copy of SmartCharts. If you haven't got yourself a copy of SmartCharts, look in the description of the video here, and there's a 7-day free trial of SmartCharts for anybody who's a subscriber to my YouTube channel. Just take advantage of that. You'll find there's lots of training. If you're not, one of the things I wanted you guys to be really aware of is I try and put lots of great content on the YouTube channel. I know lots of other people who run their YouTube channels run it as advertising campaigns. Look, I believe in just giving you the content and the training on there, and then, you know, and I think if you just serve people and give them as much great content as possible and help them, they'll make a decision whether they want to go ahead and do the full training. But I will say this, and please don't think this is a big pitch or anything, but the training in SmartCharts is incredible because it's been chapterized, which means we build you up. There's a whole trader cycle which has been built up so that each layer sits on top of itself. So then when you get to the kind of training I'm doing on YouTube, you're going to go, oh my God, yeah, I see exactly where that slots into the grand scheme of things. So we've put probably about 2.5 years of thinking into how to structure this in such a way that it's modularized, but you can then follow it, and you can and you can really build yourself from the ground up. So if you haven't got a free copy of SmartCharts yet, it runs for 7 days. Grab it and then go through all the training, because I think you're going to find that to be incredibly powerful and helpful. So that is my power pivot strategy. Let's watch those over the next couple of days. That Euro Yen, that dollar Swiss trade. Remember, it's confluence of all of the time frames. We want to make sure we got that done. And if you enjoyed this video, please hit like. If you haven't subscribed to the channel already, make sure you get yourself on there and do that. And don't forget to look in the description if you'd like to get yourself access to SmartCharts. There is a hell of a lot of tools. I've only shown you a little bit so far. Grab that. And if you're at home in isolation, which seems to be the case for most of the world, please take care of yourself and your family, and look forward to seeing you at a future training video from here in the Trading Den. They're all gone. It's literally just me in the Trading Den, but therefore today it's just you and I exclusively here, and I'm therefore going to teach you one of my favorite tools of all time. Today I'm going to teach you how to place and trade and profit using Power Pivot. That is going to be covered right here, right now. Okay guys, so here we are in the Trading Den. It's very eerily quiet, but that's good because it gives us some lovely concentration time. And today I'm going to show you the tool that kicked it all off for me, and it's all about pivots. In fact, many of you might have Googled me on the internet and seen me make £19,000 in about 4 minutes. Trading sterling, I think it was, back in those days. God, it was over literally 15 years ago, that particular trade. I'm going to show you today how I use Power Pivots. Now, Power Pivots is a real precision way of making money in the markets. For those of you who are trading throughout this coronavirus time will realize that the markets have literally gone mental. 2008's got nothing on what's going on right now. The market volatility, look, I'm going to say this straight off the bat. Market volatility right now will crunch you in half if you don't know what you're doing. Because right now, volatility is utterly fantastic. However, the swings and the movements, as those of you that are looking at the markets are probably aware, are pretty insane. And for that very reason, we are having a field day, but you've got to know how to handle intraday volatility. If you are unsure, you need to go back and look at my video on the ATR, which is the average true range. That's a cracking video, which is going to show you how to measure, look, where you should be putting that stop loss. If you look at the euro dollar, in fact, let's have a quick look at the euro dollar right now. I'm just going to jump to a regular chart. Let's break up euro dollar just on the daily. Let's just take a look at the daily chart. I mean, just look at the vast swings that we've got up and down that's happening on euro dollar. Same thing is for sterling. Let's just go British pound against US dollar. And you'll see. Hold on, I haven't got these ones sorted in the list. There we are, there it is. Same kind of picture with sterling. So big swings up and down. You know what's happening right now. We're getting deaths every 5 minutes from different countries around the world. You've got Donald Trump saying all sorts of crazy things. You've got Boris Johnson, who's the Prime Minister of the United Kingdom, has just come down with coronavirus, as has the Health Secretary. So it's all a bit mental. We're thinking the UK may be in lockdown till June, and the Deputy Health Minister has now just said that could even be extended to December. So who knows what the hell is going on? I can tell you one thing, For currency traders, whilst from a humanitarian perspective, this is a disastrous time. And of course, many people are losing their incomes. Many people are having to really reevaluate how they're going to live their lives this year. Currency traders are having a field day. I mean, let's be really clear about that. There is volatility out there. And what we don't want is flat, snake-like markets. We want markets which are raging up and down. You only need to look at this chart to see that markets are raging up and down. So there is opportunity out there. The question then becomes, responsible trader, how do I harness, how do I tether that bull, and how do I make sure I can use it in a productive way to make money rather than just get slopped around, because there is a lot of slopping around going on out there. I'm going to introduce you now to a trading tool I've been using for literally the last 25 years. It's the concept of trading pivots or using pivot points. So this is power pivot points. We're going to get into that right now. So let me just jump to, if you look at my screen, you'll notice that I've got a little button here called Morning Pivots. And really what I'm doing here is I've set my screen layout in SmartCharts so I get a good view on what the markets are doing. Now, if you look how I've organized this, and if I put my mouse here, you can see I've got my four screen layout is detailed as the following. I'm going to tell you how I do this so you can set your SmartCharts up to be exactly the same as mine. So you'll notice that if I click here, I can grid my charts for 4 charts. You want to make sure that's selected. Top left-hand corner, we're going to have the daily chart. That's D1 daily chart. So you select daily here, and you just literally pick daily. No strategy here at all, not useful, because we're literally going to do this as a manual setup. You'll see how the whole thing comes together in a second. Now you'll notice the green dotted line here is the 200 period moving average. Now that is the guideline for, is the market in an uptrend or a downtrend? It's a very broad kind of indicator which says, look, if the markets are trading underneath that 200 period moving average on the daily, we're looking at short positions. Now, we then move over to the next screen on the right-hand side, and you'll notice there's a green spot. Now, let me just click on that green spot. And what I've done is I've series linked these charts together, which basically means that whatever currency I select on any of the charts on this screen, it will update all the other charts. And the reason I'm doing that is I'm just using these 4 separate windows to have just a different view on the same world. Of course, right now I'm looking at dollar Swiss. That's USD/CHF. And you'll notice I've picked the same color. So they're all the same color links. If I confirm that, it just means if I change anything here, it will update all the screens. See, look, I've just clicked on Sterling Kiwi and it's updated all those screens. Let me go back to the dollar Swiss though, because I want to focus predominantly on that. There it is. Right, now, you'll notice I've created a green dotted line, which is going to be the 200 period moving average. If you don't know how to put that on your chart, let me just quickly show you how to do that. You come across and you hit here indicator, and I've got in here EMA. So you just type in here EMA and it brings up the exponential moving average, and then on it goes. Now let me show you how you edit the exponential moving average. Let me just remove one because you don't need 2 moving averages of the same number. I just then hit this cog, this settings button here. And all I've done is I've said source is closed, it's exponentialized, which means it gives more pricing relevance to more recent pricing data. So that's exponential. The style I've picked is dotted, nice fat line 4, so it's obvious, and I've made it green. I update that. And that gives me that dotted red, that dotted green line, which is the 200 period moving average. On dollar Swiss, you can see that price is underneath the 200. So that tells us that's a tick for a short. Then we move across to the 4-hour chart. Price is underneath that. That's a tick for a short. Then the bottom left screen, now notice I've just added the same indicator to all of those screens. I can even save that profile of indicator if I want. All I just would do is I hit the save button here, and I can call this, I don't know, call it Greg Pivot, if we like. And I can say save that, and that's now Greg Pivot. Then if I then open it, if I then want to add it onto here, I'll just hit Greg Pivot, hit the plus, and it adds it to there, you see? So boom, done. But obviously I want to keep it nice and simple like that. So I can add, let me just close that. I can add any of those profiles or templates I want to any of my screens. That's completely acceptable. Now, bottom left-hand corner, I've got the hourly chart, so I can see price is again underneath that 200 period moving average. And then here, and this is the interesting one, is my 5-minute chart, okay? And that is the one that I'm going to have my pivot lines on. So what am I looking to do? Well, let's open up the action window is the window which is bottom right. That's the one where all the trading activity is going to take place. So I'm going to open that window right now, and you'll see if we can just drag this down. Now you can see this main pivot point line. Let me just change my my cursor to a grab tool. Let me just see if I can bring this now. Okay, great. So you can now you're getting an understanding. Now you can see price is sitting right in the middle of that main pivot point line. So what is a pivot point line? How are these pivot point lines calculated? What is the game all about? Pivot point lines are calculated from the previous trading session's activity. So you'll notice the main blue line is an important, that's called the main pivot point line. If the price is below that line, we look to take short positions. If the price is above the blue line, we'd look to take long positions. However, we would not be taking a long position here because we're actively seeking short positions here. So if you look here on here, we would wait for this price to break below the blue line, and then we would run it just north of the first red S1 line. So this is the support first S1 line, this is S2, and lower down here will be S3. Above is R1, which stands for resistance line 1. This is resistance line 2, and of course this is resistance line 3. So on the dollar Swiss, I can take this trade on. Now let me show you how you can kind of make this a little bit better. So I would take this trade on if I get a confirmed break below that pivot point line. Now you can see markets in the dollar Swiss market are sitting right on the pivot point line. There's really no major direction moving here. That's okay, because that means it's potentially going to break down or break up. If it breaks up, I'm not interested in placing the trade whatsoever. I'm only interested in placing a trade which would go short. Because why? Because I've got all the major market direction in my favor. Look to the left. Is the price below the 200 on the daily? Yes, it is. Is the price below the 200 on the 4 hour? That's this top right hand chart. Yes, it is. Is the price below the 1 hour on the 200? That's the bottom left chart. Yes, it is. And then finally, where I do my work, my action is here on that bottom right chart. Now hit the middle button there on SmartCharts, which will expand that screen so I can really see what I'm doing. You'll see price is now stuck onto that pivot point line. That is an uncertain market. That's okay. When market gets some direction, if it continues in the same direction, physiology of the other major time frames, when we're looking up to get our major time frame direction, that daily, that 4 hour, that 1 hour, which is pushing down, we want to set ourselves up to catch this little fish if it's going to move in our direction. Let me show you how you do that. So all I'm going to do here is I'm going to hit the short button. Now I'm going to move my lines around. So I hit the short button and I say, look, I'm going to take profit north of the red line. I'm going to have my sell entry. And if I'm smart about this, I move my short line just south of where we've had this. So I'm going to let it clearly break through that major pivot point line. And I want my stop loss to be up here. So I've got some nice protection. So you can certainly see, look, I'm risking £2,000 to make 2,600. And why have I put it just north, let's say, of this R1 line? Because you're going to find that price is going to bounce off there. If it drops through here and enters me short, for it to come all the way back and break through the main pivot point line and break through the R1 line, it's a dumb trade. It's a duff trade. It hasn't worked out. But I'm giving myself plenty of protection. I'm putting my stop loss behind the main pivot point line, which is now has got to break through to go short. And I'm putting my stop loss above that R1 line. That's really going to be important. That's going to give me lots and lots of protection. Plus, I've got more profit to make than I'm risking, but it nearly is a 1-to-1. Profit is a little bit more in my favor. So I like the look of that trade. I've got all the major market direction in my favor. The price would have to break down through the pivot, and I'm making sure that it's breaking through enough of this support, which is formed just underneath the pivot point line. So I want to make sure that I get through the pivot point line. I want to make sure I break through the price support that's there, and then it's on its way. To victory. My take profit should be north. Should be north of that major support line. So it's basically a 1-to-1 nearly kind of trade. I like the look of it. I then just hit go. and then that is all set up and it's ready to trade. Let's have a look at a couple more just to give you an understanding of how that works. But hopefully you can see there's a structure to this. There's the daily, there's the 4 hour, there's the 1 hour, and then the action happens on that 5 minute chart. Let's look at a couple more. I did spot euro yen this morning, so I can literally, these are all series linked, these, so I just click on one and it should update all of my charts. There we go. So again, I've got price on the daily, which is below the 200, as you can see. I've got price just below, around the 200 on the 4 hour, price just below the 1 hour. Like this look. We like the look of this because we're just breaking through those 200 on the daily, sorry, on the hourly or on the 4 hour, which means we could have a good push from here. Let's open up the 5 minute chart. Now we can see what's happened here. Well, on the 5 minute chart, we're already through the main pivot point line. That happened this morning. Look at that. High test off this morning. Lovely run down. The move's already happened on that. Okay, fair enough. So what happens? How else can we play this? Well, we can look, if the market comes back and touches again towards the 200, that can give us an opportunity to go short. We can put a short position on that, no problem whatsoever. And that means that then if it does, we can put a sell stop here with a stop loss. Let's put that in. So I can put my stop loss above. I can put my sell entry if we hit around this level here, and I can put my take profit right back down to where it was before. That should then give me, let's have a little look. Yeah, I'm gonna put my stop loss just north of the pivot point line because that is going to give me enough resistance protection. Quite happy with that. There's no point in putting it all the way at R1 because we can see the range where the euro yen is. You can see what happened early this morning. Touched up through the pivot point line, fell, hit a lovely, good old 70 pip run this morning. Could go ahead and do that this morning. So I can just leave this bait in the water. If the market comes back and touches that, I'm going to be short at this level here, which is short of 119.85. Stop loss at 120.31. And my take profit, if I can use my eyeballs, 119 spot, sort of 20 or somewhere around there. 20, no, actually 15, I think. Yeah, 13. Okay, 119, 13 or 11. Doesn't matter. It's there or thereabouts. In fact, actually I want it. Yeah, let's go 11, 119, 12. That would be the preferred number. So yeah, my profit target is 3,300. I'm going to take, my trade size is 6 lots. By the way, if you're concerned or you're worried or you don't understand how to trade size properly, SmartCharts does this so beautifully and so elegantly. On the right-hand side here, look, I just put in the risk on my ultimate account. There's 104 grand in this account. So I'm only going to risk 2% of my account. Then SmartCharts cleverly figures out how many lots I should use, or if we want to do spread bets or pounds per points or contracts for difference. It really doesn't matter. You can actually trade size in a variety of different ways. Pounds per point, lot size, cash amount, whatever you like. Anyway, so on the euro yen, you can see again, I've got all that trade confluence is what we call it in the mix. So I now can hit, I can put my expiry because it's a pivot is end of day. So I'm going to stick that on end of day. In other words, if it doesn't happen by the end of today, those pivot point lines are irrelevant. So I want this trade taken off the table. I didn't do that with my last trade. Let me show you how you go back and do that. I literally can shrink the screen right down. Then I go back to trade. You'll see the 2 trades I just put on. Let's put pending here. And the first one I did was that dollar Swiss. And you can see that trade is in. And there's my expiry. I put no expiry on that one. So I want to go in and change that trade. So let me pick this one back up. There we go. So I've clicked on it. Now watch. If I bring the trade ticket, change my expiry here, and I put end of day, and then I hit OK, it'll then put the end of day, which means it's going to be in 9 hours and 23 minutes. And there you go. You can see the countdown clock is ticking. So if I go back to my charts, let's just have a quick look at sterling. Last one I want to have a look at, and then you'll get a good understanding. You can see now it's put a dotted line. Do you see the dotted line on the top? That is when the trade expiry is going to happen. If I open up this screen here and I scroll along, hold on, you'll see this dotted line. That dotted line says this trade will be taken off the table if it hasn't triggered at this point. So that gives you an understanding of how the trade management system works, okay? And let's just do one more. A little sterling trade. Again, so we've got price. We haven't got confluence here. Price is above the 200 on the hourly. Was it sterling Aussie perhaps I was looking at this morning? yeah, you've got a lack of confidence here again. So you've got price above. Here we go. This is a bit better. And you've already had the reaction. So sterling Aussie price above the 200 on the daily, as it is on the 4 hour, as it is on the 1 hour. Bringing up then the action charts for these pivots. Look at this. I mean, this is a volatile market, no less, right? But let's just bring that across. So this is your 5-minute chart. Now you can see price has broken up through the 200, through the main pivot point line here. Your profit target would be the R1. We're not in an ideal situation to enter this trade for obvious reasons, because it's either in play. I don't like the look of trading this above that, so that's not something I want to do. But you've got the 2 ones on there, the euro yen. The reason I wouldn't enter this one is because either we would want to make sure we've cleared this, these would be intra pivot point resistance areas, and we want to get it on a break through the main pivot point line here. That's already happened, so that's not to be traded right now. But the euro yen one we can keep watching, and the dollar Swiss one, have a look yourself on your copy of SmartCharts. If you haven't got yourself a copy of SmartCharts, look in the description of the video here, and there's a 7-day free trial of SmartCharts for anybody who's a subscriber to my YouTube channel. Just take advantage of that. You'll find there's lots of training. If you're not, one of the things I want you guys to be really aware of is I try and put lots of great content on the YouTube channel. I know lots of other people who run their YouTube channels run it as advertising campaigns. Look, I believe in just giving you the content and the training on there, and then, you know, and I think if you just serve people and give them as much great content as possible and help them, they'll make a decision whether they want to go ahead and do the full training. But I will say this, and please don't think this is a big pitch or anything, but the training in SmartCharts is incredible because it's been chapterized, which means we build you up. There's a whole trader cycle which has been built up so that each layer sits on top of itself. So then when you get to the kind of training I'm doing on YouTube, you're going to go, oh my God, yeah, I see exactly where that slots into the grand scheme of things. So we've put probably about 2.5 years of thinking into how to structure this in such a way that it's modularized, but you can then follow it, and you can and you can really build yourself from the ground up. So if you haven't got a free copy of SmartCharts yet, it runs for 7 days. Grab it and then go through all the training, because I think you're going to find that to be incredibly powerful and helpful. So that is my power pivot strategy. Let's watch those over the next couple of days. That euro yen, that dollar Swiss trade. Remember, it's confluence of all of the time frames. We want to make sure we got that done. And if you enjoyed this video, please hit like. If you haven't subscribed to the channel already, make sure you get yourself on there and do that. And don't forget to look in the description if you'd like to get yourself access to SmartCharts. There is a hell of a lot of tools. I've only shown you a little bit so far. Grab that. And if you're at home in isolation, which seems to be the case for most of the world, please take care of yourselves and your family, and look forward to seeing you at a future training video from here in the Trading Den.
Steve and Dave use eToro to invest in the financial markets. Steve does research on global investment opportunities. Dave does research on how to become a level 60 wizard. Steve follows the feed for the latest market news. Dave follows the
Well, hello everybody, welcome back to the Trading Den. I'm your host Greg Secker, and today is going to be an incredible day. And the reason for that is today we are discussing the 4 stages of trading mastery, how to become an autopilot currency trader, how to use wearable technology to improve your myelination process, which effectively is going to speed you up to mastery, and that is the place every currency trader wants to be. We're going to be discussing that right here, right now. Okay, so as we get into this session, let me give you a bit of a backdrop. There was an incredible guy by the name of Daniel Coyle who wrote this groundbreaking book, and it's called The Talent Code. In his subtitle, he says, "Greatness isn't born, it's grown." And I'm a big believer of that. In other words, when we all talk about Mozart, we all talk about Beethoven, we all talk about these incredible people that have achieved the most incredible achievements in their life compared to the rest of us. But what we fail to recognize, and we always put it down to, well, they've just got good talent. Daniel Coyle argues that talent itself is not born, it is nurtured and it is grown by the process of mastery, which effectively is this. It is the process of myelination. Now, what does that mean? What is the process of mastery and myelination? This is something I really want to get into your mind, and it will give you a 4-step plan to greatness. And I genuinely mean that. I've been training and teaching this for nearly 20 years now, and this is the difference that makes the difference. How do you get a Mozart which can make the most incredible music in his teens? What people don't realise is that Mozart had done over 10,000 hours of training with his father, who was a top-rated piano teacher, long before anybody had even got to 2,000 or 3,000 hours. In other words, he practiced, but he didn't just do good practice, he did perfect practice. And he went eloquently through the 4 stages of mastery at a young age. Tiger Woods was hitting drives off the fairway, off the tee onto the fairway, front and centre, straight onto the green at 4 and 5 years old. So this training happened for these people very early on, and they achieved mastery quickly. Now, there are 4 stages to mastery. And I want you to think of this, and I'm going to give you an analogy to say something else in our world, which of course is driving. Let's just take driving as an analogy. Well, the belief constructs around driving are there already, implied and in place for you. And what I mean by that is when you come to the age of 17, 18 years old, learning to drive a car for the first time, you've got lots of social proof that driving is relatively easy. It's a skill that can be learned quite quickly. And although despite the only thing that is stopping you from death is a simple white line in the middle of the road which delineates you from oncoming traffic, we learn the rules, we practice it, and then we get in the game. And of course, the benefit of learning to drive means you get to escape your parents' house at 17 years old and you no longer have to use the taxi of mum and dad. But at the same time, you also give yourself what could be a very scary day. It's also a very liberating day. Trading, you certainly aren't risking your life. You are risking your money, of course. But of course, there isn't the social proof around us. Your grandfather, your father, your mother, your sister, your brother probably are not currency traders or any market traders for that matter. And so there is not the social proof around you to give you that implied belief construct that it's possible. So for many people, they simply can't see themselves doing it because they haven't had that in their world. Let's pretend for a second that you have built the belief and you have surrounded yourself with a peer group of individuals who are succeeding and certainly who are in the category of mastery, an autopilot currency trader. What are those 4 steps? Well, again, back to that analogy of the car. Let's take an 18-year-old driving as someone who's achieved mastery. Well, there are 4 stages to that mastery process. Stage 1 is what we call unconscious incompetence. That's unconscious incompetence. What that means is, in the analogy of driving, it's like being a baby. A baby doesn't know that in 17 or 18 years it will be driving, or he or she will be driving. Baby doesn't even know driving's important, doesn't even know driving's a skill to learn, and has no concept of how incompetent they are vis-a-vis being a successful, disciplined driver. They have no awareness of their gap that exists between them as a young child and of course being a competent driver. So that's what we call unconscious incompetent. I'm not aware of my shortcomings. That's really phase 1. Phase 2 is what we call conscious incompetence. So this of course is the 17-year-old who very much realizes that he's not a proficient driver yet, but he's in a school of tuition and training, he's being coached, he's going through all the processes that he needs to go through in order to close that gap. So he is consciously aware, he's training, but he knows he's incompetent. And many months later, he may be now driving around in stage 3, which is where he's got his P plates, meaning he's just passed his driving test. Everyone's aware that this is a new driver on the road with a P stuck on the back of his car. And he is what we call consciously competent. He can do it, but it's not automatic. He has to think about it. And that's really important because whilst it's not unconsciously competent, which is the highest level, number 4, he is competent, but a lot of his brain power is being used following plans, ensuring that he's, mirror signal maneuver, all of those things we learn, all those little routines and tricks that we learn, he still has to go through in his mind. And then by doing that over a period of months and weeks and years and so on, he gets to stage 4, which is unconscious competent. In other words, he's competent. He doesn't even have to think about it. It becomes autopilot. The routines, the systems, the structures, all is routine, it's embedded. And in fact, it's what Coyle would call, and what many neuroscientists would call, It's in the area of neuroplasticity, which means the ability for the brain to learn new skills quickly, and then, of course, embed them, which is where things become autopilot. There is a science to this, through what we call myelination. Now, myelin sheaths are these neurons which run through your body. Your whole body is an electrical chemical system, which is perfectly and infinitely tuned. But of course, for you to learn a skill, for example, if you're a magician, which I am, or a piano player, which I am, or a helicopter pilot, which I am, all of those three things, and a trader, at some point I've had to master those things, which means at a technical level inside the body, you're talking about this little thin sheath of myelin, which is actually a fat substitute, wrapping around each myelin sheath. And the more it wraps around, it goes from kind of like a dial-up modem communication to like hardcore 4G, 5G broadband, where the signal is so much stronger. When the signal is strong, it means the myelin sheath wrapping around those neurons has become thicker, the communication is strong, and then you get to a place where even after half a bottle of champagne at a dinner party, you can still sit down at a piano and rattle out any Elton John song, because it literally is programmed within your mind. That is a level of mastery that if you bring to the trading game, you can literally live in a completely different space. So you'll remember I did the Ultimate Trading Plan quest that we did that a couple of weeks back. That quest was all about giving you a 4-step plan to building your trading plan. And that, if you haven't done that quest already, I really suggest you go back and do that quest, because that will give you your 4-step plan. Then how do we take that amazing plan and ensure that we are responding, trading, acting, and being consistent with that plan and not becoming a gambler? And this is the area of mastery. This is about putting that plan and putting your behavior on the correct autopilot path. But yeah, in order to do that, we've got to use some breakthroughs now. So those 4 stages we have to break through, really identify where we are. And as I now go through the 4 stages of mastery, and I'm going to describe it now, not in terms of a driver or a child, but in terms of you as a currency trader, which may be a novice at this time, or you may be somewhat inexperienced, but I'd love you to comment, if you will, in the comments of this video today as I walk you through the 4 stages of mastery. And then as I get to the end of this, I'm going to talk to you about some of the latest wearable technology you can use to actually accelerate your learning process. You know, if trading is a skill, which let me tell you that this is a skill, and that can be enhanced and sped up by the use of very clever wearable technology. In fact, there is some very clever brain stimulation wearable technology which accelerates the process of myelination. Now, when I first discovered all of this 2 or 3 years ago, of course, I've tried everything. I mean, I've tried all the latest wearable nootropics, meditation sensors, anything which can give me a cutting edge, anything that can give me, you know, the next level. And by the way, the advancements in this level of neuroscience and neuroplasticity has gone through the roof in literally the last 10 years. So you'll see, as I discuss at the end, some technology you can wear which can actually accelerate you through those 4 stages as quickly as possible. I proved it by learning Your Song by Elton John in less than a week. Fully sat down, no music, learning it, playing by hand, and I can now play that song because I was wearing this very clever technology which accelerated that learning process. That is something that you can add to your armory, to your tool set, because remember, this game is not about making money. This game is about getting you to be the best you can possibly be, and as an output from that, you will make money. But if we can get you disciplined with a really rigid, structured trading plan, and then get you unconsciously competent. In other words, you just do it on autopilot. You follow that plan, you act in accordance with that on autopilot, you are going to be in great shape. Let's discuss what we are trying to really achieve in today's training and talk about these 4 stages of learning. Incorrectly, it's been attributed to Dr. Maslow. Now, Dr. Maslow did the hierarchy of needs. That's really what he became famous for. The 4 stages of mastery and learning was actually discovered by another gentleman in the US whose name I will put on the screen right now because I can't remember it. When it's applied to trading and how we learn every single day, it will help you stick to the plan. Now, learning these 4 stages of mastery or learning will help you increase your awareness from where you are now to really where you want to be by understanding consistency versus intensity to become an autopilot trader. For example, you can't get into shape by going to the gym for 9 hours. It won't work. But if you work out every single day for 30 to 45 minutes, you will absolutely get into shape. Intensity is like going to the dentist. It's fixed in the time we know exactly what we're going to do. But if that's the only thing we do and then rely everything onto our dentist, all of our teeth will eventually at some point fall out. This is the difference between horizontal time and vertical time. Horizontal time says, I do a little bit to get to where I want to go each day. Vertical time says, I haven't done what I needed to do. Now I'm in emergency mode. Now I'm having my stomach stapled because I never went to the gym and I'm now too fat, I can't get in any clothing. Or now I'm having a divorce because the relationship, I never figured out working on it. I never worked on it every day. I just let it get so bad. And now I'm in a place where I have to change everything in vertical time. That's called the emergency plan. That's called the quick fix. And often that puts us in a bad place. So in other words, the intensity itself is not enough. We also know we're supposed to brush our teeth 3 times a day for 2 minutes, and that'll help you maintain a good smile without losing your teeth and get you into a routine. Now, the amount of money made in the Forex markets isn't about time. I think you're probably aware of that now. It's not about time, it's not about energy, and it's not about effort. Spending too much of your time sitting in front of the computer doing analysis paralysis is not going to get you there. This is about consistency and then sticking to your trading plan by doing low effort frequently to produce high impact. And that's really the game we want to be in. So let's have a look at phase 1 or stage 1 of learning, which we call unconscious incompetent. This is your novice trader. So this is the initial phase of a novice trader when he's just getting his feet wet in the markets. At this stage, a trader doesn't really know what he doesn't know. And that's an important distinction. That can be liberating because you haven't got too much on your mind, but it's a very dangerous place to be in because the dangers are not obvious to the trader. Trading decisions are pretty much still a gamble. They're not backed by a sophisticated decision-making process. And although the unconscious, incompetent trader will never admit that, in fact, they're going to be the worst because they're the least introspective of the 4 stages, they don't know any better yet. So the characteristics of an unconscious, incompetent trader, and as I say these now, I want you to think, is this me? And if so, mark yourself in the comment underneath this video so we get an understanding of what kind of spread of different types of traders we've got as subscribers on my channel. Because some of you, of course, are going to be in the unconscious incompetence. Some of you are going to be in a different area. And you're going to notice that as we go through the different areas, there are challenges that come up. So a few characteristics of the unconscious incompetent trader. Randomly opening and exiting trades without a defined trading system. That's classic 101. He changes his system on a trade-to-trade basis. So on a trade-to-trade basis, the system's getting tweaked and changed every time. So there's no control to measure against. He or she, I should say he or she, because there are happily an increasing number of lady traders coming into the game. And as we talked about in one of my last videos, they are naturally set as a predisposition to be more effective in this on balance. Sorry, gents. He does not, or she does not apply risk management or position sizing principles. In other words, if you look at the list of losing trades from somebody who is unconsciously incompetent, you'll be aware that the losing trades vary quite wildly. Now, that shouldn't really be the case with somebody that's running a detailed ultimate trading plan, because the ultimate trading plan would say, look, you aren't allowed to take more than 1 or 2% risk per trade, and therefore you would find all the losing trades to be consistent with 1 or 2%. The stage 1 unconscious incompetent trader is not going to be in that place whatsoever. You'll see they lose 5% on one trade, 10% on another, 0.5% on another, and so it's going to be quite varied. There isn't a system in place, which therefore demonstrates that the trader is controlled emotionally. They are making emotional, feeling, gut-based decisions rather than logic, following a plan in a disciplined, masterful type format. I want to delineate that and show you the differences between the two so you can really check in with yourself and ask yourself really honestly where I am in the plan. Because incorrect identification of your position in this process will not result in much benefit for you. In other words, if you don't know where you are in the plan, you don't know what you need to do next to get from maybe stage 1 to stage 2 to stage 3. You've got to figure out which one you are. Honesty is going to be critically important here. You often changes trade direction on the spot and chases price. So I'm long, oh shit, it's going up, now I'm going to go short. Oh, it's short, oh, now I'm going to go long. And we see that happen a lot. Very quickly, someone has a short bias on euro dollar based on nothing. They haven't even bothered to check the higher time frame. Maybe it's above the 200. Suddenly it starts rallying and then they jump on the other side of the trade and try and catch it all the time, paying lots of spread away and getting themselves into a fair old muddle. They get motivated by winning trades and they don't really care much about losses. Beginner's luck is the juice of the day, is what keeps them going. And often one loss, just one, can often wipe out all of the wins on a bunch of previous trades. This is indicative of somebody that's, cutting their winning trades too early and letting their losses run. So at this stage, the traders with beginner's luck are more likely to keep going and make it to the next stage. However, often traders lose money, they get easily discouraged and acknowledge that trading isn't as easy as clicking a mouse. Here it's really important to understand that you are just getting started and that not knowing a lot is totally okay. Your focus should be on learning the basics and trying not to lose too much money. The goal here is to move from stage 1 to stage 2. And stage 1 is always about realization of where you are in the stages. Stage 1 is about bringing to your conscious attention that actually you may not be running to a plan. You may be falling foul of a number of these characteristics of the unconscious incompetent trader. And until that realization set or stage sits in, and of course we realize where we are, we can't take the appropriate action to move from stage 1 to stage 2. Now, let's have a look at stage 2. So stage 2 is conscious incompetence. So remember, if you look at the analogy with a child that's driving, this of course is not a baby anymore, not knowing they can't drive, but this is a 17-year-old who realizes, look, there is a gap between my skill set and being a competent driver. I'm trying to fill that gap by undergoing tuition coaching instruction with a driving instructor, and I'm consciously working on it. I'm aware I'm incompetent. So at least I have the realization phase in my mind that yes, there's some work to do here. I've got to fill the gap. This is what we need for you to be able to go through and know which stage you're at, so you know what work to do next. When I've got you with a cracking trading plan, when we accelerate this mastery, you're going to find yourself in a completely different space. If you're somebody who's watching this right now, who's having inconsistent returns or inconsistent results, one day you're doing great, the next day you're not, you're in the unconscious incompetence phase. You don't know what you don't know. And that's a dangerous place to be, because you might think you're more competent than you are. Analysis of this that we've done over the last nearly 18 years now demonstrates that most beginners think they're way higher up the curve than where they really are at. And that's why you often get some seasoned traders who sit there and laugh at beginners and say, you don't know what you're up against yet. Well, you can go into this just foolhardy, relying on a few wins to keep you going, or you can put this structure in place. I highly suggest the latter. So what is stage 2? Well, it's conscious incompetence. We know that there's a gap. It's the stage of consciousness. This stage, should I say, of conscious incompetence is the one that usually lasts the longest. This is the learning, training, coaching, mentoring, threshold, making choices. Some traders will never leave this stage. Please be aware of that. Even after years of being involved in the markets, they spend their time just literally consuming more information. There's a few principles and questions that can make you aware of potential problems in your trading mindset and general approach would really be the following. Have I changed my trading system more than once in the last 6 months without really putting in the work? Basically what we call system hopping, and this should really be avoided. So system hopping is, I haven't really played full out. My trading plan might suggest I trade 15 to 20 positions a week. On average, I'm doing 5 or 6, haven't really thrashed the system out, haven't really embedded or trained it through, and now I'm hopping onto another system. Probability of mastery with that approach is practically zero. Am I actively reviewing my trades to find out what is going wrong? Or do I try new things all the time without dedicating myself? Am I still making impulsive trading mistakes that cost a lot of money? Or do I follow my trading rules? Do I repeat the same trading mistakes again and again? And in order for me to know that, I've got to look at what I've done in the past. I've got to introspect. I've got to go back, look at my losing trades, and do I spot a pattern? Lying to yourself will keep you trapped in the current phase and your current state, and you won't be able to improve nor evolve as a trader. So that's your stage 2. So let's now jump into stage 3, and stage 3 is the analogy with driving was of course a young man or girl having passed their driving test, and they're now 17 years old, but they've got bloody great P plates stuck on the back of their car telling everybody on the road that they are a new driver and to be treated with some caution. Well, that conscious competence says, I'm a proficient trader, I can do it, but I have to think about it. And that thinking about it is going to burn my neural activity. In other words, it's going to tire me out. This is where you constantly have to think, mirrors signal maneuver when you're in a car, or clutch in first, and then I select the gear, and oh my God, I've grinded the gears again. Well, over time, it just becomes an automated, myelinated, as Daniel Coyle put it, code that becomes encoded into your nervous system, meaning you don't have to use up too much conscious capacity to keep on path. The trader now starts to realize what trading is all about. Although trading is still not easy and the results are far from being perfect, he understands the importance, and this is key, the importance of process-orientated thinking. He stops focusing on only the outcome of his trades. Now, most traders want consistent results before they apply consistent actions, which therefore is impossible. First, you need a consistent approach, a solid routine without much deviation, and then you will have consistent results as a byproduct of that. Of course, those results won't be too impressive at first, and you'll probably keep losing for a while, but at least you have something you can work with. As I said in previous videos, you've got a control. When your actions and results are all over the place, it's impossible to identify specific things and work on them. You've got no control. So it's critically important that we have a trading plan in place first, see previous quests for that, and then we implement this process of self-mastery. Self-mastery means I'm putting routines and practices in place which ensure I move from unconscious incompetence through conscious incompetence to where we are now in this example, which is conscious competence. I know what I've got to do, but I have to think about it. To then finally, which is the place we all want to end up, which is becoming number 4, stage 4. Few people get there, which is unconscious competence. This is autopilot trader. This is mastery. This is heavy myelination. So at this stage, the trader has spent years of looking at screens, taking the same setups, hundreds or thousands of times. He knows exactly how his preferred setup looks like, and then trading becomes effectively a waiting game. He's not pushing himself emotionally into a position. At this stage, the trader has fully internalized that he can't win on every trade, and more importantly, he doesn't care about losses as long as he follows his rules. In fact, his rule set, as we learned through the trading plan work that we did, his rule set has changed from I'm a success if I make money to I am a success if I follow my plan. And then if my plan doesn't yield money, then of course I make changes to the plan. So trading is now an activity of pattern recognition, risk management, and constant self-improvement. Now, the unconscious competent trader has a thirst for self-improvement and consistently and constantly studies the market and his past trades. He evaluates the effectiveness of his method. His trading journal is now the most solid foundation of his money-making business. It is his daily routine, and he can turn to it whenever the markets throw a curveball at him. He has a strong and sensible, rooted in science-based control. And so these 4 stages of mastery are critically important. I thought I'd share something with you. How do we accelerate that? How, if we can identify, and by the way, please put in the comments right now which one you find yourself in. How can we improve that? Well, I thought I'd bring in some of the technology I've been using over the last few months. This is called the Halo Sport 2. There we go, Halo Sport 2. And you'll notice, now you might think, what the hell is this thing? Well, this has got a piece of technology in it, like a neoprene series of spikes with an electrode. You wet this in water. It's got a sponge on the inside, so it absorbs that water. It then goes in here, and then you put this on your head, like so, and then you control it with an app. And effectively, what this does is it puts your brain into what we call a neuroplastic state, which means the brain is open to sculpting, learning, and trying new neural pathways which it hasn't gone down before. The pathways that you are going down right now when you think are based on the routes that you have carved and are most consistent to going down. If you're used to your spouse, whenever they give you feedback, internalizing in your head, she's being negative or he's being negative, then you'll always look at what they're saying to you, the predisposition that they're being negative, and you'll interpret it that way. If you then had a coach, counselor, or therapist say to you, well, hold on a sec, what about if that person, when they're communicating to you in that way, really is saying that from a place of love? They'll really struggle to understand how that could have come from a positive place when they're so hell-bent and used to, so conditioned to going through and looking at everything through maybe a negative set of eyes. Now, what this technology does, and which is beautiful about it, is it does two things. It puts you into a neuroplastic state, about 20 minutes of what we call priming or neuropriming, setting the mind up for a routine. So I did this, I'm a magician in the Magic Circle in the UK. My family have all been magicians and so on. So I as a part of me, which I love, and it's all about the concept or the constructs of, for me, changing people's beliefs. Right, and if you can change people's belief using magic, then you can do some amazing instructions. My kids love it, and it's always been something that's been part of our family. I wanted to learn a magic routine, and I wanted to see if I could accelerate it. I used this, and boom, I got through that routine and learned a whole set of routines, which would normally take me hours to process and then integrate into me quickly. This integrates it. So I have no affiliation with this company. If you want to get yourself one of these, you just have to buy it from them direct. But it's called a Halo 2 Sport. You need to wet this. You need to prime for 20 minutes. It's a trippy experience, I'll tell you that. And then you go into a process, like, for example, you'd have your trading plan, and then all you're doing is you're priming every day before you set up your trading day to put your brain into that neuroplastic state to increase the process of myelination. And you will find you will get to, as long as you're following your plan and doing the right practice, you'll get to stage 4 much faster than you ever would do by going the long road. So I hope that kind of gives you an insight into some of the latest technology. I've got to tell you now, like 10 years ago, we never had any technology like that. There is no excuse now if you're somebody that's committed to this, if you're somebody that really wants to make this your primary income stream, or at least a decent second income stream, or certainly give yourself more money and choice and freedom, with solid trading plans, with this kind of wearable technology, this wearable hack technology, which can certainly accelerate you to a place of mastery where the myelination process is running at 3 to 4 times faster than normal. This can certainly help with the learning process. There's one skill in life that you want to make sure you've got in your backpack, is accelerated learning capability. Accelerated learning capability. We all live in a world now where the world is changing so much, whether it's learning new trading system styles or progresses, or whether it's new businesses or new ways of being, we've all got to be able to adapt quickly in the world that we're in, be able to learn new skills, be able to learn new technology and implement that. It's all well and good to understand something, but to really know it means you're actually using it and implementing it. And technology like this really does accelerate and help. Every fat person on earth knows that if they ate less and exercised more, they'd be slimmer, but they don't do it. They know it, they understand it, but they don't know it. Knowing it is understanding the principle and implementing it. And if you can get any help, and I am all about finding the edge, how do I find that little edge, not over somebody else, but an edge which just gets me going to where I want to know better and faster. And there is such incredible technology out there available to you today, which can help with this process. However, if you don't know where you are in those 4 stages, the probability of getting to where you want to go is reduced. So I want you to be honest right now. I want you to think about where you are, put that in the comments fields. And now you've got really a couple of options. Option 1 is you can go the long, hard way, take what I've taught you here today, have a stab at it yourself, but not really get into the process of writing a trading plan and then getting yourself on the 4 stages of mastery. Those 2 things together are game changers. If you don't go that road, you are in the road of trial and error, which I can tell you is the most expensive way, emotionally, financially, and spiritually, of learning to trade. People think, well, I won't invest my time in doing a trading plan. I won't do any trading processing or coaching. I'll just put some money in the trading account and I'll have a little punt. It is expensive emotionally, spiritually, and financially if you go that road. It's harder work to put a trading plan together. It's harder work to stimulate your brain into a neuroplastic state every day and then get yourself into a process where you're super myelinating and therefore learning these skills at a mastery level. But if you're prepared to do that, the results And the avalanches of abundance in everything comes to you by putting in that hard work. Let's figure out who you are, where you fit in this process. You know, what kind of personality profile and traits as character do you bring to the table? And if you want to know that, which I think is crucial, it's going to be critical and essential to your success. So I want to make the offer to you to have access to one of my coaches completely free of charge. You'll see a link in the description field. Click that, book yourself on, and have a personality profile and figure out, okay, now I know what a trading plan looks like, the ultimate trading plan. You got that on this channel. Now let's understand who are you in this mix, and let's figure out what starting point you are at. So make sure you see that in the description of this video. Click the link to book yourself onto what we call a trader strategy call, where you want to book maybe 30 to 45 minutes with one of my coaching team who will take you through the process to help you identify who you are. Now look, if you like this video, don't forget to hit like. If you aren't a subscriber to my channel already, get yourself on the subscription list. We'd love to have you as part of our family, part of our team. I broadcast at least 2 videos a week and at least a quest now every month. Until next time, look forward to seeing you later here in the trading day.
RX Bar's core ingredients are just real, simple food. This chocolate one has sea salt you can actually see. The only bad thing is deciding who gets it first. RX Bar, simple good.
Hi guys, Greg Secker here. Welcome back to my channel. Now listen, how's your trading journey so far using the Ultimate Trading Plan? Now if you haven't already seen that quest before and participated in that quest, get yourself over there and get doing that, because that is the real starting point for your trading journey, having that Ultimate Trading Plan. And some of the trading plans I've seen are incredible. Some of you have stayed up doing a 5-hour slog and literally put together what are really top draw trading plans. So this YouTube channel for me is really adding some benefit out there in the world, and I really feel proud of what we're achieving here as a group of people. So thank you everybody for participating. It's making it all worthwhile. We're now getting ourselves into like another quest, just so you know, because I've been bombarded by messages, requests for the past few weeks to share how I manage effectively all of the things I manage. You know, as you probably know, I've been a currency market trader for the last 25 years, nearly 25, 24 and a half years or something like that. We'll call it quarter of a century. But I also do other things as well. For those of you who know, I'm not just a trader, I'm an entrepreneur, I'm a philanthropist. I sit on the board of a bunch of different things, and of course I'm a dad to 3 kids, so I've got my hands kind of full, as you probably imagine. But as an entrepreneur, trading of all the businesses is number one. And the reason that's number one is, first of all, you haven't got all the tax, legal, regulatory, filing, all the stuff that goes with people management, that goes with running lots of businesses. While I love working with people and doing amazing things, in this period of time, the trading is a no-brainer. I mean, this is literally the only recession-proof business I can think of. You know, we're looking at the airline industry, and we're looking at basically the whole of the travel, transport, and holiday tourism industries going down the chutes. There's challenges out there for all sorts of industries. Trading is completely different. In fact, this is probably the most promising business right now, despite the lockdown. So today, I am going to reveal the secret source of all my successful multinational businesses out there, which is the 6 Sigma approach. Now, if you're not aware of what the 6 Sigma approach is, I think you're going to find this to be an incredible quest, broken down into a 3-part series, starting today by following the 6-step trader cycle. We're going to be covering that right here, right now. What is 6 Sigma, and why is it so important to business? Let's just start there as a mindset. Well, why do you think companies such as 3M, ABBA, Apple, Microsoft, General Electric, Ford Motors, NASA, and many more invest in training and learning about 6 Sigma? Why do they all do that? Well, 6 Sigma is a method that provides organizations tools to improve the capability of their business processes. They realize the value implied in their team and in their organization is all based on the effectiveness and the efficiency of their systems and processes, which effectively underlies what a business is. This increase in performance and a decrease in process variation helps lead to effectively defect reduction and improvement in ultimate bottom line profits. In other words, the process of eliminating the error. Just think about that for a second. The process of eliminating the error, allowing you 3 or 4 errors per million opportunities. In trading, it's all about winning big, losing small by following the 6-step trader cycle. Now, for those of you already subscribers to SmartCharts and you've gone through some of the learning process, you will have gone through the 6-step trader cycle. It underpins the whole training that evolved from and within SmartCharts, which became the Learn to Trade and SmartCharts Trader Training Program. So that trader cycle is implicit within there. Now, for you to call yourself a trader, you should know the meaning behind the word trader. Think about that. T-R-A-D-E-R, trader. I created this step-by-step guide using the word trader because it's helpful, it's easy to remember, and it's a process. And the game here is to reduce the errors, increase the predictability and the effectiveness of this process. This is going to be the underbelly to who you are, what you become, and how you perform. Let me break it down for you. So the T in the word trader really refers to trend. The R refers to relative price. The A is additional analysis. The D is decision. The E is examine. And then finally, the R is review. For those of you who've watched any of my videos in the past will realize that I often put a 200 period moving average on my chart, on a daily chart, to let me know, is this market in an uptrend or a downtrend? But it's really important before we start off to know where the market's bias is. Is the market making lower lows? Is the market making lower highs? And if so, we're in a downtrend. But is the market making higher lows and higher highs? Then we're going to find ourselves in an uptrend. But starting off, our first step is to chunk up from anything we're considering doing in the trading game and looking at where is the major market tide moving. Is it moving from east to west, or is it moving from north to south? In other words, are we in a buyer's market here? Is the market force, pressure and intensity producing higher highs and higher lows? And then effectively we're pulling more markets. It's a market bias towards buyers, or do we have a market bias towards sellers? Markets are making lower highs and therefore lower lows. It's critically important that whenever we set our charts up, this 6 Sigma of Forex trading, step 1 is we aren't doing what those beginners are doing, going in and having a punt based on some crazy idea we may have picked up. We're not doing that whatsoever. What we're doing is we're having a market bias lead our direction, lead our decision making. So we know this from our trading plan that we always build in trends straight off the bat. You'll notice when I pull up my 4 screens on SmartCharts and I show what any kind of trading I'm doing, whether that's going to be a breakfast breakout, whether that's going to be, a pivot trade, whether that's going to be a 20 bounce, whether it's going to be any of the strategies I've been profiling to you of recent times, I always start with my chunk up. So what does the daily and even the weekly say for that particular asset class? And when I look at what we call the price structure. So price structure, of course, is where markets are just not making any lower lows. In fact, the lows keep getting higher and the highs keep getting higher. That means there's buys in there. So therefore, I start with my step 1, which is my market bias, which must be dedicated and it must be completely focused on the market price structure. Nothing else. We look at price structure. We look, are we making lower lows? Are we making higher lows? Are we making higher highs? Or are we making lower highs? And by drawing the trend, connecting the 3 points at a bare minimum along a perpendicular line, which suggests there is either a bias towards buyers or sellers, helps us start our process and filters and focuses our thinking based on a bias. If you don't have a bias, you don't have a plan. If you don't have a plan, you don't have a control. If you don't have a control, you're trading in chaos. And that will only result in one thing: disaster.
The brake! Hold the right handle!
We need to get you to a place called order. An amazing author by the name of Jordan Peterson wrote a groundbreaking book all about the 12 rules, where he talks about our life in order or chaos. We have to have guidelines, we have to have reference points, we have to have discipline, and we have to have something we can stick to. If we're going to allow the bias between buyers and sellers shift very quickly based on a tip we may have gotten, based on some impatience, based on some of those unconscious, incompetent gremlins which may still be perseverating in our brain because we haven't tamed the monster, the concept of a market bias and understanding how important it is as step one to realize the trend direction and realize the bias from a higher time frame, and then how that dictates to the lower time frames where you will be placing your trading activity is going to be critically important. So step one in this is trend. How do we do it? Really simply, we plot time along the bottom, we plot price up the side, we go to our daily or our 4-hour chart, and we plot a trend line across either the peaks going down on a downtrend, that's where you're getting lower highs and lower lows, or we're going to be plotting a trend line where we're going to be connecting those higher lows and higher highs, because of course we're going to have a market bias towards buying. So this is going to be critically important as we start. So our step one is connecting at least 3 points which are in a trend line, which are effectively showing us our market bias, and then should be dictating which side of the market we're on. Think about how important that is to make sure that you've got the flip toss, the buy or the sell in the right order, and that must come from being process driven. So our step one is to always start our bias from trend. Remember, when you start learning trading strategy, your brain is going to get so immersed in that trading strategy, you're going to forget to look at the higher trend. Every single trader I've ever met that's come on our trading floors, whether they be trading floors in Sydney, in Johannesburg, in Manila, in London, no matter where we are with you, this always happens. People remember its trend, then they get so fixated, so tunnel vision on a particular strategy because it's yielding them great results, they forget to look at that change in trend. And trends are changing weekly. You know, we're living in a market now where suddenly the trend for oil is back up, then previously it's been in a terrible negative territory. The world is changing around us, so we must be omnipresent in our minds about where trend is. So that's step one. We connect the 3 points, 4-hour time frame, daily time frame, know where the bias is. I hope I've got that imprinted in our minds. So now let's look at step two. Step two of the 6 Sigma of Forex trading is about the concept of relative price. Here, we analyze the relative price in the market condition using price levels as well as bar and chart patterns. So it's kind of like you've started from 50,000 feet and now you're getting a little bit more precise and a bit more precision. So we start to look at the constructs of price. What do I mean by the constructs of price? Well, for example, you're all aware of what a simple bar chart looks like. You have the opening price, you have the high, we have the low, and we have the closing price. No big deal. If the opening price is lower than the closing price, we know that the market's gone up and stayed up for the day. And the inverse is true. If the market opened up high and dropped lower and closed lower relative to that bar, we know that there are going to be more sellers in that range or in that period of time than there were buyers. That starts us off. But of course, the most important thing to be aware of in relative price, now we've got our trend direction. Now we've got to skew that with where is support on this chart? Where is price being supported? Where is price being resisted? What kind of bar structural patterns have we got? In other words, have we got small bars, very low volatility, or have we got bars which are swinging all over the place with crazy volatility? You want to see crazy volatility? Look at the chart for WTI crude in the last couple of weeks. You're going to see crazy volatility out there. Very difficult for traders to trade crazy volatility because when you've got big bars all over the chart, you haven't got a safe small bar range to stick your stop loss under when you're placing, for example, a long trade. So markets that swing around all the time with crazy volatile bars, that kind of relative price says to you, you are in the land of the Wild West. And we have been in 2020. 2020 is the year of hindsight, right? You can look back on this year and go, geez, we had flames burning this beautiful planet of ours across Australia, across Brazil, across South America. We had at one stage 112 countries on fire at the beginning of 2020. Then we've had this crazy pandemic virus, which has wiped out the lives of thousands of people around the world and literally shut down our planet. Then you've had crazy market volatility. You've had the oil price go negative on the May futures contract. Never happened in the history of time. The May futures contract went negative $36. That's unbelievable, unprecedented, unheard of. The cash price on the spread bet Forex for WTI crude was under $5. It was $65 on the 8th of January this year. That market has tanked. Billions have been made and lost in this period of time, but the relative price that is consistent with that is going to be crazy. Now, you, as somebody who's following me, your place on our channel following this process, will know that a trading plan wouldn't allow you to trade and put stops in a crazy market condition like that. So relative price, after we've noticed the trend, we've got our direction. If we're a buyer or seller, you've got to know after step one, am I in the buying camp? Am I in the selling camp? Pick your side. Don't be somebody who's sitting on the fence going, well, if it looks a bit bid, I might buy, but oh, actually, if it's looking a bit weak, I might jump on the short side. Forget that noise. You've got to have a structure to this now. We've got to have a process to this, and we've got to have some bit discipline, and we've got to stick to it. Now's the time, guys, while we're sat at home in front of our screens, learning these skills, these tools, these strategies. Now's the time to get this game together. And that means step number one, we've got to pick that market bias. Step number two, now I'm in the 1 hour chart frame, right? I've dropped down from daily and 4 hour. I'm in the 1 hour. Now I've got to say, right, what the hell is this map look like? Now, has this map got clearly defined trends with price patterns whereby I can identify certain patterns quickly and easily? Is the market responding the way it normally responds? If I get a low test bar and it looks like a big long tail off a normal bar, this is where markets have opened up, really tested the downside, but then sprung back. That creates a big long tail. Now, following a bar pattern like that, we would expect the market to then rally. But then check in with yourself. Relative price, is it doing that? Or is markets just going bonkers? And they're not following any of the regular patterns, principles, structures, systems, and setups that we're used to. If that's the case, we've got to amend our approach. So relative price becomes very important. We've now got our bias. Don't make the mistake of picking your bias off price. Crazy. People look at a couple of price constructs. They think they see a pattern. They've forgotten step one. They've forgotten that the force of the Titanic is going down and you're buying. So you've got to look at where the groundswell is, where the market bias direction is. Then we're looking for gremlins on the chart. And your job should be the power of negative thinking. You should be asking yourself a question, how the hell could this go wrong? Let's look at price. Where's support? Where's resistance? What is the average true range of price right now? How much volatility is there? Can I sensibly put a stop loss within 30 pips without the prospect of getting stopped out within a 12-hour period? And these are concepts and considerations that we must embrace and we must bring into our armory. So my takeaway for the first quest in this brand new quest, and I hope you're loving it, please do comment into, and by the way, here's what I'd like you to do. I'd like you to take 5 of your favorite markets. So whether that be the currency markets, whether that be indices, whether that be options, whatever they are, but let's see if we can stick this to commodities, stock indices, and currencies as our 3 main asset classes. Perhaps in the comment fields, you'd like to write down where the bias is for all of these. Are you long? Are you short? And then review when people look on this comment. If you just put in euro dollar and you put buy and somebody else put sell, then you should discuss that. Why do you think one of you think there's a long bias and one of you think there's a short bias? From the training that I'm implementing on this YouTube channel, you should all have the same answer if you're all following the same videos. Okay, so that's critically important. Do you guys all agree on the bias for the top 5? Put down euro dollar, British pound against US dollar, dollar yen, dollar Swiss, and then take Kiwi and then take dollar yen and maybe Aussie dollar against the US. And there's 7 or 8 currency pairs there. Take a number of the S&P 500, the UK FTSE 100 as a starting point, and then stick some commodities on there as well. Put some gold, silver, and maybe a bit of oil. And then answer yourself the questions. Are these long or short biases? See what you guys think. Put that in the comments field, because this is a quest whereby we're now starting to integrate some real processes, which is the underpinning of some of the best businesses in the world, some of the best masters in the world, and certainly some of the best traders in the world. Now make sure you tune in for part 2, because part 1 here has been about making sure we bow down to that major trend direction, and then we start getting into relative price, support, resistance, gremlins on the chart, volatility of the bars, and any price patterns or price structures that we must be aware of. Remember, that doesn't make our decision on direction, trend does. After that, we're looking for relative price to make decisions about the ordering. Where do we get in? Where do we place our stop loss? Where do we take our profit target? Is there a certain plan to this trade which needs amending based on current market conditions? Now listen, make sure you tune in for part 2, where you're going to learn about the step 3 and step 4 of the trader cycle. So if you're not sure what they are, well, of course, that's going to be additional analysis and it's going to be decisions. If you like this video, please hit like. If you're not subscribed to the channel, now would be a great time to get on my subscription list. Thank you, by the way, all of you guys, for your amazing comments, your feedback. I really appreciate the level of interaction that you're giving me. For me, this is, I used to speak on stages all over the world, teaching people, but I'd have to get on an airplane for 30 hours to go to Australia and teach a bunch of people how to do this. Now we have the studio set up, and it is my real gift and joy to be able to communicate these thoughts, feelings, strategies, and give you guys tools in a way where you can consume them as part of a process to help you get better. Any questions you have, any things you want to see in the future, please put those in the comment fields too. And for those of you, of course, that have been watching me use SmartCharts, here comes the shameless plug for SmartCharts, but it is a shameless but a helpful plug in that it gives you a 7-day free trial of SmartCharts. If you are a current subscriber to my YouTube channel, you'll find the link to that in the comments field. Until then, I look forward to seeing you in the second part of this quest, which of course, this quest is really all about improving you and building you and using the skills and tools from the 6 Sigma approach to business process management and how that creates a 6-step trader cycle, which is the 6 Sigma. Now, if you haven't heard of what the 6 is, oh, hold on. Hold on. What is 6 Sigma? Let's start again.
People are searching Google for businesses like yours. And with a complete profile, you'll get 5 times more views. Update your business hours to help your customers find what they're looking for.
So today's challenge is on Anyone Can Trade. I'm going to teach my gardener. Now look, if he becomes a success and I end up having to mow my own lawn, things have gone really bad. But the reality is, I'm going to see if I can teach him to have green fingers of a different kind. So, Norms? Norms? This is our phase 2 movement here. So the establishment of a trend, I'll show you how we establish a trend. We want to figure out how do we identify this signal. This is the signal. So here I'm explaining to Norman the exact bar I'm looking for. I'm showing him exactly where I want to get in, where I want to get out. He's being kind of hot dropped into this, but that's okay because it's immersion training in 30 minutes. I'm going to be giving you this strategy in full detail on the webinar. Get it? The strategy simple. I mean, you've gone from pretty much no knowledge to understanding what that key turning point bar is, how we trade it, where we enter, where we put our stop loss, how we take profit. So you're pretty clear?
Yeah, easy actually.
Yeah, it's quite easy.
The point, isn't it?
Good, okay, good. Not bad.
Now I'm gonna go for AUD CAD.
Yes, that's Australian dollars against Canadian dollars. Are you buying or selling?
I'm gonna sell.
Fantastic. Yeah. Now your risk is
2%.
Happy. Green button. Boom.
Okay.
That's your first one, and that's your first trade.
Right.
So we've got 4 on.
Yep.
Let's leave it for the time horizon for these charts They're hourly charts, so we want to be getting to where we need to be in about 4 or 5 hours. So that's the kind of little move from that phase 1 to phase 2.
Right.
So you've got a little bit of balance. You've got 3 shorts. You've got a long on. So why don't we come back in a little bit and see how we get on?
Yep.
All right.
Exciting.
Excited?
Can't wait.
Yeah, go. Okay, guys. So I'm in the trading den. His 4 trades are complete. They're finished. Now, if you remember, he had 3 shorts, 1 long. So he sold 3 currency pairs. He bought 1. His results, most importantly, this is the interesting part. Swiss yen, he made 86.48. The dollar Swissy, he lost 168.30. The Aussie CAD, he's made 174.15. And the Euro yen, he's made 174.25. So net, he made £431 and 88 pence. But he did have his loser at 168.30. So net, he's made 263 quid in the space of 3 or 4 hours. So he's done well. He doesn't know. He's in the garden somewhere. So let's go and find him. Share with him the good news. 180, 200, 20, 40, 60, 70. 270 quid. Norms, that is yours.
Is it that easy, Greg? Is it that quick? Is it that easy?
That's yours, honestly.
Really? Wow. Amazing.
He placed those trades less than 5 or 6 minutes. He was in, done, and they were locked in. Then he's been in the garden for the rest of the afternoon. So to walk away with 270 quid, I think he'd consider that a good day. If you'd like to learn that exact same strategy, I'm going to be detailing in a brand new live webinar that you can register for by clicking a link around this video somewhere. If it's in Instagram, it'll be somewhere else. If it's in Facebook, it'll be somewhere else. But click the link and I'll be coming at you live on a brand new webinar. Bring a pad, bring a pen, because I'm going to show you the exact steps so you can do it too. See you there.
Free Tesla stock? Prove you deserve it, and it's all yours. You can get a free Tesla stock from a leading European stockbroker. If you win this challenge, Tesla is one of the most exciting, innovative companies in the world, and you can own a small bit of it for free just by winning a 5-day trading challenge. All you have to do is successfully trade a simulated demo account. No deposit, no commitment required. Join millions of other investors worldwide by owning one of Tesla's stocks. Do you think you can make it? Click right here, right now, and join the competition.
So there was this guy, Robin, the happy plasterer from Bristol, right? And one day he says, I want to expand. And his mate goes, you need a website then. Yeah, a GoDaddy website. So he's like, domain name, 24-hour guidance, and they'll help get your business online. So anyone can find me at the click of a button. And now the happy plasterer has even more happy customers. So everyone's like, the happy plasterer, look, he's available. I'll book him for Monday. For all the help and tools you need to grow online, GoDaddy.
Hi guys, Greg Secker here. Today I'm with my friend Skip Archimedes. Now Skip is regarded as one of the top health experts in the industry today. And on this channel, we try and do something a little bit different. I don't just focus on candlestick patterns in Forex trading, but really the holistic, full complement of all the tools and tricks and strategies I use to make sure that I can be the best I can possibly be. And I notice on a lot of the other channels where people discuss trading, technical trading and foreign exchange and all the other asset classes, no one is covering the area of nutrition. And that is a stone we cannot leave unturned. So we're going to be discussing that and how you can use this to become a better trader, to become a better human being, to have more energy, more focus, more concentration, and get the job done in less time with better results. We're going to be discussing that right here, right now. Okay, so let's get started with this series. The first section we want to talk about today is, and you brought these to the table, right? Because this is what we discussed when I was going through the lifestyle of drinking too much coffee, really losing my energy by 2 o'clock in the afternoon. I was trying to prop myself up with carbohydrates, with coffee, and my results were starting to decline. So the first section we're going to discuss with you today is poor nutrition leads to really bad trading decisions. Now maybe, Skip, if you can kind of walk us through some of those elements, then we'll give some meat to the bone, shall we?
Sure. Well, all of this is related to trading, but ideally, you've got to understand that poor nutrition equals poor results in all areas of your life. Yeah. Because what's going to happen is you're going to start to get brain fog. You're not going to be able to think clearly. You're not going to be able to make good, clear decisions. There's not going to be clarity up here. What we're also going to have is low energy. And as soon as you've got low energy, your creativity is going to go down. You're not going to have that staying power. There's going to be no endurance for you to stay in the game. Like you was experiencing at 2 o'clock in the afternoon, everything was dipping and you was looking for some type of stimulant to pick you back up. But as soon as that stimulant's burnt out, bam, your energy comes crashing back down again. So we've got to make sure that up here, because this is where all your trading decisions get made.
That's right.
So if there's fogginess, if there's low energy, what do you think is going to happen to the concentration?
Well, it's kind of interesting, right? So I remember thinking when I would meet some, you meet some people in California who are 75 years old, and they're running and they're jogging. You think, how the hell are these? Do they have some, some genetic benefit? Are they born under a different star? How come, I can meet 30-year-old people in, I don't know, the Midlands in England, right? Who haven't taken care of their health. And let's not say people in the Midlands in the UK haven't taken care of their health. There's people in the Midlands in the UK who are running triathlons, right? But I can compare two different sectors of society, and one seems to be considerably older, one seems to be considerably younger. Yet the older guys have got this incredible health and well-being and energy and vitality.
And freedom in life.
Exactly right. And what was the difference? And for me, what was really interesting is we started to, you got to look at this a little bit deeper than just at a superficial level. And what we discovered, a couple of things that rang true with me was that we don't get older because we age. We get older because we build up the number of toxins in our body. Exactly. You can see a guy who's 35 years old who's literally fat, right? He's got low energy. He looks terrible. You can see that same guy 10 years later and he looks 30 years younger than he did when he was in his mid-30s. Now, why is that? How is that? Well, it seems to be this buildup of toxins and acidity in the body, which is really causing the vast majority of the problem.
100%. And what that's going to do is, when you start making these emotional choices, this is what a lot of people are doing. They're making choices for their nutrition. They're either convenient or it's emotional. One or the other. Either one of them is not going to have you trading at your best. Yeah. So when we start to realize, right, what I've got to make is I've got to make nutritional investments. I've got to give this physical thing in that I live in, I've got to give it what it needs. Your cells need some simple things. Oxygen's number one. Keep breathing. Water number two. But nutrients. I'm not saying food. I'm saying nutrients. Yeah. Why not food? Yeah. Because we've depleted our food system. We've screwed up the food system, and basically the foods that we now buy only contain 5 to 20% of the nutritional value to 100 years ago.
The soil we have in our farms nowadays doesn't have the mineral content it had 30, 40 years
depleted ago. By like 70 to 80% globally. This is around America, it's around Asia, it's around Europe. We've screwed it up. Yeah. So we have to make sure that the body is still getting live nutrients. This is the game changer. When you start to give the body these live nutrients, all of a sudden, your memory is going to start working better. This whole flow of information is just going to start flowing up and down instead of there being a block, instead of there being fogginess. It's like trying to see through the clouds. You know what it's like in an aeroplane, when you go through a cloud, you can't see anything.
Well, that's right. And there's this human development, this personal development movement, which is all based on, learn some strategies. It's all about willpower and you're going to make progress. And I found through the training we did over the last year, that to be the exact opposite. Unless you build things from the inside out, unless you get yourself more alkalized, so you've got natural energy. If you're waking up in the morning and you think, oh God, I could really do another couple of hours in bed, that tells you everything. It tells you everything. Right?
It shows that you've got work to do.
It shows you've got work to do because you really want to be waking. I know it sounds great and it sounds, potentially utopian to be waking up in the morning and bouncing out of bed, but
it's true. I want people to know that can happen. Energy doesn't care on your age, it doesn't care on your size, it doesn't care on your skin color, it doesn't care about anything. Energy is energy. And as you once had that energy as a child, when you woke up and you sprang out of bed and you was jumping on the bed and you was energized, imagine having that now and bringing that energy to your trading. I mean, look at us before we started today. What did we do? We played.
We were playing table tennis in my pool area, that's right. And so, but interestingly enough, I think people get sidetracked into the mindset that as we're getting older, we lose energy because we're getting older, and it's not true.
Such a silly
When you're
system.
younger, you've got less toxins in you because you're practically just fresh from the womb, right? Yes. Then there's not a lot of toxins going on.
And less toxic stuff up here as well.
There's less toxicity here, there's less toxicity in the body. But as people get older, of course, they're drinking alcohol, they're drinking coffee, they're drinking lots of sugar-based products. Probably the worst you can stick in your body is sugary drinks. Yeah. Look at your average trader, and I've worked across 7 trading floors around the world, and I've met some of the best currency traders in the business. Yeah. Some of them, or should I say the vast majority of them, today their performance is way in excess of what people were achieving in the late 80s and early 90s. Because in the late 80s and early 90s, there was a big drug and alcohol culture. Performance or individual performance was not as important as how much money they were just making off clients. You know, I aren't teaching people on this channel how to work at an investment bank or how to work for a hedge fund. I'm teaching people on this channel how to become a successful self-directed currency trader, which means making money for themselves, not making money by charging people commissions, not making money by charging people performance fees, actually taking their own money, being responsible for it, making good decisions about it, using effective strategies and managing their emotions in such a way that when things go wrong, they don't react, they respond. Brilliant. And there's a big difference between reacting and responding. And what we want to get to through this series of educational videos, this area is really all about smart nutrition, using the tools that you provided with me. And by the way, I'm taking it every day. I'm taking the chlorella every day. I'm taking the lemon juice and the water every day. I'm alkalized every day.
Hours every day.
Yes, exactly.
When you, this is what I want people to understand. When you're putting dead stuff in, and I'm talking about things that are processed, things that have not got life force energy in it, this whole game of life is around energy. You need energy so that
Means that in this current market condition, we must be aware, first of all, what is the upside, what is the downside potential? Breaking the 61%, we would expect that market eventually to get back to that 100% retracement level. So effectively, we are expecting further upside. But if we are day trading this market, we've got to take much more of a session-based view. So our view really is that we expect the market to continue up and to continue further, hitting that 100% level. As we've learned in previous sessions, if the markets break that 61% level, we'd expect it over time on the daily to get back to that 100% level. But really, what is happening? Well, if we now look from a session-based perspective on the euro dollar, we can see it hit that pivot line. For those of you that don't know much about pivots, if you click here, you'll see the pivot kind of strategy training session I did previously. But effectively, if the markets break through that pivot and we're looking to take short positions from a session basis. Now, if we jump back to this 180 phase changer, we can see lots of longs being called, but you'll see there's a real disparity between the longs being called on the euro dollar and what's happening from a pivot type picture. Then, of course, we look at the alligator, jaws are closed. What do? Answer, euro dollar, absolutely nothing is the actual answer, what we want to be looking at here. We know the market's flat here. There isn't strong trading opportunity. We'd expect to see similar things across cable. So we're going to have a look at cable. But where we sit right now is you've got conflicting signals really between euro dollar on the daily, on the 4 hour, and then of course what we're seeing on that 5 minute picture on the pivot line, which basically means that market is going like this, tick tock, tick tock. If you go in there and try and play the tick-tock game, play the ranging game, you're going to get burned. So don't do that. That's my first analysis. Always start with euro dollar first. Why? It is the most traded currency pair of all time. The euro dollar has the most volume. It's the European community against the US markets. Of course, it's the most voluminous traded game in the world. So very important to notice that we are in a flat market on the euro. I'm going to switch now to sterling so you can see what we're seeing here on the sterling analysis. You should see a relatively similar picture. Again, if I bring up the fib chart on the daily, and it's a great way to start, guys. We start looking just what is the swings? How is the game setting itself up? And what you should really notice here is that as we had the high here and then we had the low, in fact, if I bring these numbers across, you can see that the high here was, of course, you know, that 132 level. The low here was that 114 level. Serious swings in currency movement there. You'll notice that as that technical picture has broken through the 61% level, we would expect this now to go all the way up to that 100% level. We'd expect that to happen. We are seeing a flattening or a beginning of a flattening of the picture as we saw on the euro dollar. Again, what does that mean? It means you're going to see mixed signals. So you're going to see some longs being called, say, on your 180 phase changer, tempting you into the market to try and get you to place a trade long, or certainly that strategy, if it was campaigning to be used, it would be saying, come on, place a long. But you've then got to look at the bottom left-hand picture. Pivots broken down. This is on the 5 minute chart. And we're seeing a short picture as well here on the hourly chart. You can see that big drop just happened. We're starting to see the alligator now turn. So whilst it's been quite not very much movement here, in other words, the lines are quite close together, now they're starting to turn down, and we could expect and we could see, in fact, a reaction just before that 78% fib level, and now starting to pull to the downside. So again, you've got mixed signals on the euro, got mixed signals on sterling. Let's have a look at the dollar yen. This is our next currency pair. So this is how I set my day up. We go euro, we go sterling, and then we go dollar yen. They're the three majors that I want to take a look at. Remember, make the most important thing the most important thing. And the most important thing in currency trading is understanding where those major markets are going. Now let's look at the dollar yen. So we're going to move along now to dollar yen. And this is the picture you should see on the dollar yen. Now we have got a small trade on the dollar yen. It's a little pip runner. I'll show you why we're doing that. First of all, let's have a look again at that fib picture. Remember, we start here with the daily. We start to see if there's any major market trends we should be aware of. This is what I really want to draw your attention to on the dollar yen. Again, we've got that big swing in movement that we've had over the last few months. Of course, we know what's been happening with all the craziness in the markets that we've had since the beginning of the year, of the world being on fire, to the coronavirus and everything else in between. We're seeing a big rejection on that 78% fib level on the dollar yen. So as that's happening, you're seeing this green line, which is the 200 period moving average. Folks, always put a 200 green line exponential moving average on your charts, critically important. The red line is the 50 period moving average. That's kind of your quarter against your year in terms of trading days. So 200 trading days against 50 is what a lot of prop traders are putting their energy, attention and focus on. I want you to notice that. Now look, you'll see my P&L is swinging around here. It should do for an account this size. Don't let that concern you. What's important and want you to focus your energy on is that we've broken through the 200 here. We've had a big rejection off the 78% level. I expect this to pull back at least to the 61, which it has, could go further to the 50% level. How does that tie up with the rest of the picture? Well, interestingly enough, if I drop down here to my bottom left screen, which of course is my pivot screen, you'll see that we are already well underneath our pivot point line. If you look here, look, the pivot point line's above. So we're kind of snaking along here. Again, it's more of a ranging position. So how do I capture some profit in this period of time? Well, I've placed here a pip runner, which was called early this morning. Now, the pip runner here was this one here. Now you'll notice with this market condition, you'll notice that you'll get longs and shorts called. That's completely acceptable. But I know I've got a good, strong rejection off that fib level. I know I've just broken through the 200. This will bobble around and it will move around. I'm completely comfortable with that. I want you to be comfortable with that as well. Obviously, you're going to be using different size trading accounts than the one I'm using here, but there is a good opportunity here to grab a profit at 107.62 on the dollar yen. There's good downside pressure here. I'm expecting this to continue. If I then look bottom right, which of course is my alligator, you can see it has flipped over and those jaws are nicely open. So I expect that trending movement, that grab, that pip runner and take a profit at 107.62 is where I am banking. Now, you'll see this swing around in this trading session. Very common, very normal. Don't ever play the game where you look at the P&L and watch it move up and down. So they're my three majors. Now, what else do I add to the mix? Well, you might be surprised to know that actually in terms of volume this year, one of the most traded currency pairs is the Australian dollar and the New Zealand dollar, but most importantly, the Aussie. So I want to jump into the Aussie right now because that's something that I think you really should be aware of. It's something I placed this morning. So this is my Aussie analysis. Now, here's an interesting thing to be aware of. First and foremost, okay, let's look at the Aussie. You'll see that the Aussie on the main picture, now let's bring that up in terms of fibs and bring that market along. Hold on. Here we go. Now, you might think, well, hold on a sec, Greg. This looks like it's in a major uptrend, right? Since it's retraced from around the end of March into early April. Hold on a second. Let's just auto scale that back and move that across. There we go, nice and clear. You can see, look, we've got this lovely rejection off the 100% level. Now, for those of you that trade only above the 250, great beginner strategy, but I've got a nice rejection off that 100% retracement level. I did place a trade this morning. I want you to be aware of that. It was a pivot trade. So let me show you where that happened this morning. This was my pivot trade this morning. If I turn my flag on, you'll see here this morning, I nipped in and I grabbed, if I click on this, you'll see, let's have a look at the trade. I took $5,000 this morning, a little bit earlier than I would have got on camera with you. There are other opportunities in this market. I'm going to show you how to identify them. But, you know, this is a game of early bird catches the worm. And this morning, we're recording now. It's just about 9 o'clock, which is perfect timing because it's going to allow me to show you what's happening in the breakfast breakout arena. And that's something I'm going to be excited to do. But I just want to show you and review these two trades I've done today. So I'm looking at pivot trades. I've looked at the pivot because it's 100% fib level, rejection, moving down quite strongly. I jumped in, I grabbed a sell just as it broke through. I had to be quick. It was a very manual trade, but I had to be quick and grab what I could. The trade took half an hour, $5,000. I opened here at 69.70. I had a stop loss at 69.90. I had a take profit at 69.50. So nice little 20 pipper, off I went. And a great simple trade. Did the same thing on the Kiwi as well. You should see those two things closely correlated. They are commodity-based currencies. They do react to commodity prices, and they have had nice rejections, which means there's a good shift to the downside. So That was my Aussie this morning. Notice what that looks like on the rest of the world. You could say, if you were a beginner, you're like, well, on the daily, the price is above the 50 and the 200. But wait, it's rejecting off that fib level. Now move over to any of the other screens and you should see confirmation of that big drop as, look, the alligator is turning over and opening its jaws. You can see the big drops down that we've had this morning. It's on the 1 hour chart. You can see the break through the fib levels, the fib level here, the test on the fib level, but the breakthrough on the pivot levels. It means that we managed to get in, grab a quick and dirty profit, and then come out again. Same thing I'm now going to show you on the Kiwi. So let's move into the Kiwi, and you'll see what I've done with SmartCharts here, and I want you guys to be aware of this. And these are just 2 quick dirty strategies that I've got on. When we do more of these market forecasts, I'm going to try and record these earlier on a Monday so I can actually do them live with you so you can actually see these. But please put comments in on this video if you like this style. We sit and we strategize what we want to talk about, what things are important. From a lot of the comments we've had, they're like, Greg, just trade live with us. Show us how you do it. Well, you got to get up early if you want to trade live with me because this is a 5:30 to 6 o'clock a.m. Greenwich Mean Time. We're actually in British summertime right now. So that's 7:30 in the morning if you're on the GMT time, but it's an early session, so I have to get in early, and if you want to come join me on any of those live trading sessions, please put that in the comments and I'll guide you step by step with what I'm doing. I want you to know though that these are, I'm not giving you trading advice here. These are just what I'm looking at in the market. So anything I'm telling you here, you guys have got to figure out what you want to do, okay? This is certainly not any kind of trading advice or any financial advice. This is how Greg Secker sets up his day and what he's looking for. And in current market conditions where you've got some trending markets changing, you're getting rejections off fib levels, I think learning in context for you is going to be the next level of what we're going to deliver to you on this channel, and I think it's going to make a real big impact.
When you are looking at
the quickest way to learn something and understand something is to do it. I'm a big believer in apprenticeships beat university degrees, and I really mean that.
That's why we call it.
You learn in context, like you're sat next to me doing this with me, and I think by doing that you'll get a lot more experience and you'll be able to apply it to the market. Let's just take a look at this Kiwi again. Left hand side here, we have got same thing. Okay, so watch this. We have kind of a weird spiking line here, which is a weird spiking line. And what we're going to do is I've moved my fib level to the bottom here. However, this kind of spike does confuse the fib level a little bit. And if I just adjust this a little bit and say, well, actually, if we ignore this red spike line down here and it's more here, you'll see, interestingly enough, it's more of the same sort of rejection that we've been getting on the Aussie dollar, and which of course has allowed us to place the same type of trade that we did this morning. The pip run, of course, is showing a short here. This is not really, we're not really looking at pip runners here to get into this. We're looking more importantly, again, at the breach, the break here of the pivot point line, which is really important. And you can see, again, how that alligator, that trending alligator is opening its jaws to the downside. So this, again, a beautiful pivot break. Now, when you are struggling for finding a trend, you're really then looking for breakouts. That's why I'm now going to jump to the UK 100, the FTSE 100 breakfast breakout strategy, because in this world where markets trend up and trend down, there are, of course, in between that, big chunks of time when markets go sideways, and that's really what you're looking at right now. So these breaks where clearly you've got nice rejections on big daily charts on Fibonacci levels, which you're seeing on the Kiwi and on the Aussie. You saw what we did on the Euro, we saw what we did on Sterling. That is not to be ignored, because that's where you can pull great pip movements by clearly seeing nice fib rejection level and then a nice break in pivots. You add those two things together, you can really add some punch to what you're doing in the mornings, and that is really critical. Otherwise, you're going to sit there waiting for the markets to turn around again and retrend, and of course, by the time it's retrended, you're going to be too late into the game. So let's just look at this trade we placed a little while ago this morning. If I click on these flags here, hold on, let's see if I can, one sec, there we go. So this one we had a sell at 62.26, stop loss was at 65.46 and take profit at 65.16. We just grabbed quick in and out, 10 pips, market was moving quickly. I did actually adjust this slightly wrong. Have to be hands up and a bit honest here. I meant to go for but between 18 and 22 pips. I kind of finger fudged it this morning because I was doing 10 other things preparing for this session. Only managed